Morning, good morning, good afternoon, good night. Good afternoon, good morning, good night. Wherever you are in this big old God given world, I hope you are having a good Saturday. I do have some music in the background right now. I'll turn that down. My name is Carson Gilman. I'm glad to be here. Henry. There you are, sir. I see you. I see some familiar faces, maybe some new ones on today's call. We do have a couple more new guys and gals joining. Um, I hope this video finds you in good health. And Henny, are you there?
Yeah, I'm here. I'll be on in just a second here.
All good. We're gonna give people about 3 to 5 minutes to kind of hop on. We will have some people that join in throughout the call. Not everyone gets here right at the time, but we will let them join in. This is recorded. It is not a specific time in which we do this. It is really just in coordinate with what mine and Henry's schedule looks like. We try to keep it to where it's both of us.
Hey guys, what's
Hello,
up?
Peter. Hello, Peter. How are you?
I'm good, thank you very much. Just I was listening this space. I just got off to come see
Yep.
you guys.
Yep. Kit is on a Twitter space right now, and Michael is in there. I was on there for a little bit, but I got off probably about an hour ago, just kind of prepping for this call. But yeah, so the calls each week. I know I got to you guys a little bit late this week. I've had a very busy week outside of trading, but usually on Wednesday or Thursday, I will send out an email to give you guys some form of time to forecast and plan your weekend. Uh, Other than that, we do like to keep it on Sundays. This weekend was just a little caveat, and there'll be weekends like that because it's life. There's life, and you can't forget that as much as I love being here and I'm committed, and me and Henry, we have to kind of fit things in certain areas in order to get to you guys the content that you guys need, want, and love, and so do I. So we will start at 3:05. If you got to go to the bathroom, go to the bathroom. If you need to grab snacks, grab snacks. I'm going to turn some of my music up and just kind of get ready. We will be here in the next, we'll be going in the next 4 minutes.
All right. What's going on, everyone?
Hello, brother. How are you?
Doing all right? Feeling
Hey,
good?
how are you?
Peter, how are you? Brady, Jess, did
Good
yourself,
morning.
Louise, Irvin, Jenny? How's
Hey,
everyone doing?
hey,
Suzanne?
I shared in the chat. This girl just posted these weekly profile pictures. It's he gathered it together, and it's a pretty cool post. I think like you should guys check it out.
Yeah, I'll take a look here.
Profiles.
Oh, nice.
Yeah, we'll definitely take a look at it for sure.
Very nice. I like that.
There are like 700 people on this trader roundup. I just looked at it.
Yeah, it gets big when Michael comes in.
Yeah.
It just becomes one big story time now. But it is cool. I'm glad that Michael does that stuff for traders. He gives the traders an opportunity to be present, and it is very cool. And it is nice to get in there and say thank you.
Yeah.
But at the end of the day, I mean, it's you don't want to get too flooded with that because at the end of the day, it kind of becomes a fangirl event, which is nice. I mean, everyone wants to give their love to Michael, and I agree, and I think it's great. But also at the end of the day, there's usually no trading talk that goes on in there very shortly or after he kind of gets on and it starts piling in because there's just people that want to express their love and their stories, and that's perfectly fine. But sometimes it can get overwhelming for me at least because
Yeah, it does for sure, man.
yeah.
Like right now, we're supposed to talk about the Dixie divergence stuff, and it's personal again.
Yeah. So I mean, it's like I was able to at least answer a couple questions for people in there, and then I dropped off. I just said my quick thanks to Mike, and from there it was business as usual.
Yeah, and thank you for your
Alrighty.
contribution over there.
Yeah, not a problem. Alrighty. So we are going to kind of get started. People will hop in. Some people won't be able to make it today, obviously. That is perfectly fine. It is midday on Saturday, and people have lives. But if hopefully you were able to fit us in, I'm give you a little rundown if you are new and you are watching this through a recording, so you know going into the weeks kind of how this works. I send out an email either Wednesday or Thursday. I know it's a little bit later this week, but Wednesday or Thursday you'll get an email out, and it'll basically cover what we are the concepts or whatever is going down within the call and the time, and then the link is posted in there. Um, I'm very casual throughout this process. Whether you want to raise your hand or whether or not you want to kind of butt in, I do not get mad if you interrupt me, as long as it just stays in some form of formal order, making sure that we don't have a whole lot of people talking at once. If you have a question, you can either raise your hand, or if it just can't wait, I get it, I totally understand. You can just unmute yourself, and from there, just open question. Um, sometimes I will hold off on the question if I am in kind of a deep train of thought or a point that I'm trying to make, but I will get back to it. That's kind of just the format of this. There's no specific thing there's no schedule with what we Henry, or here, I got you. Just need to moderate people. Sometimes they'll join in and they will mute each other, or they don't know that they're unmuted. But basically, the format is just kind of open. It's things that each week it's 1 to 2 concepts diving into something that ICT has taught in the past, and we just kind of dial in on that. And then we also open floor for you guys to ask questions. If you guys want us to go over markups, whatever the case may be, that's open for you. It's really focused on ES and DXY. That's what I trade. That's what Henry trades. And I think a lot of people in here trade as well. You do not have to trade ES. I do expect you to potentially look at the dollar. It is important throughout almost whatever you trade. But aside from that, that is basically the gist of it. It is nothing crazy special. It's just a couple of traders that are getting together to try to figure out and better ourselves and answer some questions. Someone might ask a question that you might have not thought to ask, and that might help you. Be wary that there are going to be new people that come into this, and their questions might already have been asked prior, but that's okay. That's just the way it works. Just be patient with people. We're all here to get to the same end goal. So I do appreciate every single one of you guys for being here. I guess I'm going to just kind of hop into it. I'll go over the financial calendar for this week, and then from there I will kind of touch on just the dollar a little bit, and then I'll unless Henry, if you want to go over dollar, you can, or yes, it doesn't matter. We kind of look at the same things, so one gets one, the other kind of gets the other. That way, it's not repetitive. And we usually end up going into. Hold on, please, guys, when you're coming in here, try to make sure you're somewhat muted. I know sometimes Zoom will you'll join and you won't be muted, but try to keep it muted until you have a question. Aside from that, that is really about it. We will be covering what happened this past week on the dollar and ES, what potentially could unfold next week on dollar and ES. I'm going to review my trades from the prior week. Henry will be reviewing his trades from the prior week. From there, we'll break down today. We're going to talk about kind of deviations of ranges and how to kind of utilize that and understand maybe targets and potential things that go around there with regards to the central bank dealers range and standard deviations above and below it. We also are going to also be going in kind of more in depth on how to try to build some form of top-down analysis. That was something that I think a couple people reached out in the community this week to me and asked if I could touch on that, and I thought it would be good. So I'm going to go a little bit more in depth on how to break something down from a monthly down to a 1 minute, and that will always be custom to the trader. That's always a little bit different in certain areas, but hopefully me and Henry could give you a little bit of tips and tricks on as to how I do it, and so does he. So with that being said, we'll get started. This upcoming week, March 6th through March 10th, nothing really going on Monday. We do have Powell testifying on Tuesday at 10 a.m. Be very wary of that. That is volatile. Wednesday, 8:15 a.m. We have our non-farm employment change, as well as Powell testifying again at 10 a.m. So back-to-back days, Powell testifying. The same time he's testifying, we do have job openings up. So the AM session on Wednesday will be somewhat of a fireworks show for sure. It will be a little volatile. Thursday, we do have unemployment claims. Thursday, we do have unemployment claims. Sorry about that, guys. And then after that, on Friday, we obviously have our average hourly earnings as well as NFP and unemployment rate. So we'll be kind of a firework week this week. I do like the chunk of the week. On weeks like this, I believe myself as a trader, I tend to try to take as much opportunity out of the market going into Tuesday and Wednesday. Even I don't trade on Mondays, but I do study a lot of what happens on Mondays this week because there's a lot of manipulation at play this week. So you want to understand that. So I will be very into price action on Monday, and then following that, usually Tuesday and Wednesday, I will try to have some form of performance in the market, and then I let Thursday and Friday play without me. As well as I've seen some days are pretty clean on these days with NFP on Thursday and Friday, but most of the time, if you are not experienced, and I'm even experienced, and I still choose to step out of the market, yes, do I miss moves? Yes, but it's at the end of the day, it's my money that I'm risking, and I would rather save the headache and the time, and I would rather utilize my performance in the first half of the week. That's just me. I hope that you choose to do your own research and play with it in your own style and manner, and let me know. And please bring that back for good feedback. So yeah, appreciate everyone joining. That's the news calendar for this week. That's the way I'm planning it with regards to my trading. Going to be looking for Tuesday and Wednesday, hopefully, to try to have some form of performance in the market, and then let that Thursday and Friday play without me. Still study, still be a student. You need to understand what happens during those days, but that doesn't equate to you needing to try to be a participant in the market and making money. There's just you're going to give yourself a hard time because you might see something, you might take a loss, and then that's a whole nother story, right? So why not just watch? And if you can't just watch without pressing a button, then don't watch. There's a whole big world out there. Go eat. There's things that you can get your mind off of and not trading. So with regards to that, I will go ahead and Henry, you got a preference on ES or dollar? I can do dollar if you want to do it ES.
Yeah, you can look at the dollar.
Okay, all right. So I'm going to look at the dollar really quick, guys. It is something important within your trading if you guys are relatively new. I'm going to break this down on a higher time frame level and kind of break it down. I will get into how I'm doing this, but because we are going to be talking about top-down analysis, usually I'm just staying on higher time frames within these calls unless we're talking about a specific subject. Because the subject today is top-down analysis, I am going to be going a little bit further in depth on this analysis. So just bear with me. So we are looking at a monthly. If you want to look at 3-month, you can. That is another tool that you might be able to utilize. There's no reason for me to do it right now, especially with there are beginners on this call. Monthly is fine. It's a good that you can think about that as that you're top. So going into a monthly, I do want to notice first off where are we coming from? Well, originally we were coming from this area up here, right? That to me is basically where we
You
are.
don't have screen, Carson, sorry.
Oh, thank you. Appreciate that. I forget that I have to switch it over. Sorry about that, guys. All right, we're good here. You guys can see?
That's
Yes.
good, Carson.
All right. Alrighty, perfect. Thank you. So to me, the first thing that I'm wanting to look at, what we're playing off of, is going to be basically this area and price action over here. There's things that I can identify. There's a couple areas that I might be looking at. But since we're looking at the monthly and we are kind of breaking things down, I'm gonna first, obviously, my eye goes to this breaker right here. Carson, why is this a breaker? I will explain to you why this is a breaker. But I would classify this as a negative. So I use the negative sign for bearish and positive sign for bullish breaker block. And then I basically bracket that into a monthly. So I will go 1 capital M. Lowercase m would be minute. Uppercase would be month. So 1 month. So I know when I'm going in on smaller time frames, when I look at that area, I'm knowing that that's an area that's coming off of a monthly. Why is that a breaker? I'm not going to get too into breakers today. They are something that are covered a lot. But price made a high, price then made a low. And then following taking that high, we collapsed and displaced through the low. So we take the high, failure to go higher, and then we take the low. To me, I can use this as a breaker block. Some people might view it as mitigation. That's fine. But you can see the reaction following it. Basically, price trades up into it, respects the top half of the breaker, does not trade outside of the breaker, and then goes lower. So we're displacing off of that, but now we're rebounding. Where are we rebounding from? Well, we had just last month filled a BISI. What is a BISI? It is a buy-side imbalance, sell-side inefficiency. It is a classified fair value gap that requires basically the idea behind bullish market movement following a delivery inside of it. I know that can be a mouthful for new people. I understand, but just bear with me. It is okay. It's not as complex as you think. But one thing that I'm noting on a monthly, one, we're delivering away from this. We're kind of delivering away from the breaker block, but now it feels as if we're kind of retracing back up into the down, out of the reaction. So we had a reaction out of it. Now we're kind of retracing inside that reaction. We've got two things that I kind of see within this range. We do have this BISI, so I would mark this out as a BISI. We have a BISI here, and we also have a SIBI, which is the other form of a free value gap right here. And you can obviously highlight the time frames and stuff here too, but I'm going to be kind of just switching some stuff up for a second. So we have a BISI and we have a SIBI, and obviously this is on a monthly time frame. I also, when I'm looking in with regards to the power of three, the past 3 things that have happened, in this case, the past 3 monthly candles, what has been going on? Well, we took out a monthly low. So in February, to start February, we took out January's low, and then we transferred into this BISI. And if I were to actually zoom in on this BISI for a second, and we were to quarter this BISI, what does that mean, Carson, when you say you're going to quarter it? Well, I'm going to take the halfway point of it, and I'm going to basically utilize half of the halfway point, and you can break it down into quarters. So when I break it down into quarters, you'll be able to see this. So there's more to a free value gap than just this high, this low, and the consequent encroachment. There's a little bit more that's at play there. But it's okay. If you're new to this, you don't have to always necessarily think about this stuff with regards. Henry, also, I don't have the chat up, but if you see people that raise their hands, will you let me know? And if you see anything in the chat, will you let me know?
Yeah, I'm keeping watching.
Okay, thank you. So you can see we have the 25% of the whole entire thing, the 50%, and the other 25%. We dipped down. We took January's low. That's liquidity taken. We also were able to take last month's May low that we made and dipped into this BISI. We did not touch the consequent encroachment. We did tap into the quarter of the free value gap. That shows me that there's not a whole lot. If we were actually very somewhat bearish following this breaker, if we were actually somewhat bearish, decently at least, we could have at least tested the consequent encroachment of it and or the full thing. because we're coming off of just the quarter of it, to me, that's some form of institutional order flow drill, which means that this BISI and the order flow could potentially be leading to price potentially on a way higher. Now, with that being said, there's no reason to try to figure out, unless you are placing 1 to 2 trades a year, which I don't think anyone in here is, you don't need to know where price is going to be at the end of the year right now, right? It's where is price going within this month. So we're focused within these 3 candles. To me, I believe, because we took out January's low last month, because of the willingness to stay above the consequent encroachment of this BISI, because we have a SIBI right here, I believe we are on our way to 106, which 106 is basically the opening of this. There's a little tiny volume imbalance in here. I don't need to know or try to predict or try to be a wizard or anything like that to try to understand where it's going to go or if it's going to fill the whole thing. I just think from where price is currently at, by the end of the month, we will visit 106. And so that's where I take that down into a weekly. So I'm understanding where we are on these charts. And then basically I'll go down into a weekly. I don't necessarily need to add anything more. There might be things that you want to add. It's totally different to everyone else. If you wanted to go and add to, because this is a larger free value gap, maybe you do want to add the quarter of it right here. So if we go into here, you can add, I'll add these dashed lines for right now, and I'll quarter this SIBI for you guys, just in case you guys want to see what it would transpire to. The last thing that I'm going to get off of this is just where the equilibrium is from this high to this low. And we can see it's basically the consequent encroachment. So instead of trying to label a bunch of things on my chart, I reckon you get a piece of paper. I have a whiteboard right here, so when I am writing stuff, I can easily erase stuff and write stuff. So I would easily, instead of trying to have lines over lines over lines, I would easily just say monthly range equilibrium from September 2022's high into February 2023's low. The equilibrium of that is what number? 107, 1.816. You could even just round it up to 108. And you would note that it is also at the consequent encroachment of a monthly SIBI. That way you don't have to layer things. Use paper and use the actual price levels to guide you and understand. So when you're looking at things, it doesn't get confusing. So you know that there's confluence there. When I go into a weekly, I'm basically looking at how the couple, I'm not looking all the way over here yet. The first thing that I'm looking at is over into here. So I'm looking at this buy side liquidity resting at 106, right? We had been watching this for a while, and a lot of this price action was dependent on how we traded within this wick. We were looking at the consequent encroachment, the 25% of it, and all this stuff, and we just had this big closure here. Knowing that we have this closure, it gives me a reason to believe that potentially the target in which price is wanting to trade towards is the liquidity resting above these highs, excuse me. With that being said, that doesn't equate to price just going there, right? You don't want to just assume that. And this week was a good example as to how price doesn't, just because you have this big candle right here, doesn't necessarily mean the next candle is going to be just as big and it's going to tear through that. That's not how price works. And so you have to understand price has to retrace. Out of all of this downward movement, we did not take out last week's low, but there is something in here that is a little sneaky to me, and I'm curious going into this week. And this is why I told people on Trader Roundup this week that the market has all month to necessarily get to 106. It doesn't have to do it in the first day, nor does it have to do it in the first week. But if we look at the high of not last week's candle, but the week prior, it came in at 105.320. And then the high of last week's candle was 105.359. So understanding, if we zoom in really close on these two candles, you might not be able to see it, but you can see this, how one candle goes above it. To me, they are engineering liquidity between this wick, and these two highs, but I think we might have some form of retracement a little bit even lower than this. One second, guys. I am dealing with like a dry cough and a sore throat, so let me cough 1 second. So we haven't even taken out a previous week's low, but I do think that this could call for some form of a little bit deeper retracement. Where I am looking at now with regards to retracements lower is this candle in here. To me, I'm going to try to treat this candle like an order block because price took out sell side liquidity right here. We had that was the down closure that it took it out. Big beefy down closure at least. Yes, we have these candles, but I'm looking at the candle that is the most transparent to my eye. It's the one that has not a whole lot of wicks and it has the biggest body to it. From there, we transferred lower. We took out sell side liquidity. We dipped into an imbalance, and then from there, we went higher. Now that we have very clear closure outside of it, I would want to try to see price do a couple things. I would want to see it come into here. I would potentially want to see it maybe even come into here. It could come into the lower part of it. What you would do is you would try to understand the open of this candle, the mean threshold of this candle. Those are some areas in which you would want to see what is mean threshold. It is the equilibrium of this candle. So you would take a Fibonacci tool and you would mark that up from high to low and you would get the equilibrium. Price could trade even deeper into it. And I would almost kind of feel a little bit safer if we do have down closure in it, right? Correct? Because you'll notice, and it's a little bit easier on higher time frames, but when you're dealing with order blocks, it's got a block on top of each other, right? It's kind of, there's got to be stacks. And that leads into propulsion blocks, and not every order block, not every candle that delivers into a specific order block is an order block. People view it as a propulsion block. Because I have a lot of new people on this, I'm not going to get too fancy with the terms yet until we get a little bit into it. But I would want to see another down close candles kind of dig into that, close, and then have an immediate reaction higher. That would signify, that would basically be, to me, a form of order block, propulsion block, whatever you want to call it. So I am looking at that stuff. I'm looking at this candle on the weekly as well. I'm noting that. I would be noting the 25% inconsequent encroachment. I would kind of break this weekly candle down a lot. I also would note too on a weekly, if I take previous week, we kind of closed right at that equilibrium right here, right? You take a fib low to a fib high on this weekly up close candle, and all we did was just kind of retrace back a little bit below it, but then we closed right at equilibrium. So really nothing crazy that happened this following week. Yes, so someone said, month 4 for core content will answer all of your questions, all this stuff. Suzanne said her chart is frozen. I'm not quite sure, Suzanne. If it is frozen for anyone else, let me know, and it might be something on my side. If not, I would recommend maybe quitting the app or restarting the app and joining back in. But from there, I'm trying to understand. Where and why price is going to go lower and where it could possibly go after it goes lower, because I don't think we will get back down into these levels. It's been a thought in my mind, but also at the same time, I just don't think that it's a stretch for me, at least. It's a stretch for me. My focus is more up here, understanding price under here. We might manipulate and take a weekly low right here. Notice the difference, though, between the weekly low right here and the weekly low down here. This weekly low already took out a weekly low, right? Because we have this. We have that already has been taken, and then we trade higher. So price might just want to manipulate another weekly low. Notice how it just took out the weekly low and then traded higher. I don't think it's a stretch for price as to where it is right here. It's a stretch for it to go all the way back down here, in my opinion, because we're so close to this equilibrium, or excuse me, buy side liquidity in here. So from there, I'm assuming that we could potentially, if we don't just trade higher, we could come back down into the open of this order block. We could come and test this weekly low, take it out as liquidity. We could come into the 25% of this wick, even the 50% of this wick. And if I were to sit here and I were to grab the equilibrium of this down close candle, I would grab this. You can identify this as, so I would identify this as order block, positive order block. Oops. And then I would identify this as positive order block mean threshold. Oh, this stuff is not calibrated as it should. And then from there, I would understand where the consequent encroachment of this wick is. And then I would also get the 25%. So these are some levels that I would also be looking at too. Right? So we're going into there. I understand the weekly low. We can do, I'll mark this as 25% wick, and I'll mark it as a weekly. I will go consequent encroachment of the wick. Weekly. Why is all this stuff calibrated? It's not supposed to be. All right. So having this, and this is obviously just previous week's low. All right. So this is some stuff that I would be taking. Notice how I'm trying to be more understanding of what's below me, because I understand the idea of what could potentially, I know what's above me, right? It's very clear. There's buy side liquidity here. It's understanding that if and when price chooses to go lower, where can we be looking for that turnaround? I think that's really most important. All right, Brady says, what are your thoughts on the January 9th weekly down close candle being at the balanced price range to tap if you're going to get there? Just to, alrighty, so let me see. Alrighty. He said January 9th. Let me see right here. So to me, it could technically possibly be a balanced price range, but to me, yes, it's balanced, which is good. That's why you wouldn't necessarily need to see sell side delivery in it, and that's why I think if we do go into it, you're not going to try to see it fill all of this. It's just going to be there to induce buy or to induce sellers. Any downward movement is just an inducement at this point, because they're wanting to think they want this to be sold as a triple top, right? That's what the idea behind all of this is the market's going to want this to be induced, and people want us to view this as a triple top. And so from that point, when price goes down into there, price is already balanced, right? We had sell side delivered and price went back and forth even in here. So to me, yes, it's balanced. There's a little sliver that to me isn't necessarily balanced on this higher price run, but I'm not really worried about the balancing of price at this point, because one, we already took sell side down here. Price delivered lower. We filled what was in here. And also, if you wanted to, you could use this free value gap in here, the SIBI, and you could invert it. That kind of lines up within some of these levels. But I'm just worried about, or I'm not worried about, but what I'm just focusing on is if we do come into this January 9th candle, it's something that I'm not going to want price to just hang out there, right? I want it to sell. I want it to sell the sell. Price has to sell the sell. Like you're trying to sell the fool. So it's gotta look like a sell before it goes higher, right? It's gotta sell anyone that doesn't know what they're doing on it. So I'm gonna want to see price downward. I wouldn't mind to see a candle like this, maybe not that big, maybe half of that, but I want to see a big beefy candle close into that. That's gonna sell anybody who doesn't really know what they're doing. But the following week or the following day, whatever it is, I'm going to try to be expecting a potential buy model unfolding, because I know what's above us, right? I know the inefficiency on the monthly, but I also know the triple top and the buy side liquidity at 106. So going into a daily now, if I look into a daily, you can see this week was really rough. It was just back and forth, back and forth. It's high resistance, guys. Not every week's going to be pretty. You'll have runs of weeks and even a month where price action is beautiful. But more importantly, you have to understand it's not If it was that easy, everyone could do it, right? So it's weeks like this where you got to be patient, you got to understand yourself a little bit more, and you got to be a student more than anything. So basically, from that standpoint, um, I'm to me, I'm noting prices. The reason why I'm suspecting price could potentially go lower, aside from just this kind of wick nature in here, this to me looks like some form of potential near term, not long term, but near term order block stack. I'm watching this low in here. Originally, I said that this low would shift structure for me, but I don't really think it would. I don't think I would immediately shift my bias on it. To me, I would sit here and I would look to see now we have a high, we have a low, we have a high of this range. Notice where this equilibrium lies. It's right there. So price could very easily just trade now that we have a low and a high confirmed to me. We did not go any higher. We kind of just stalled out. Now we could be potentially going lower. And all price has to do is just deliver to discount. And with regards to this range from this high, or excuse me, from this low to this high, we could retrace back down into equilibrium, into maybe a little bit more into a discount, into that order block mean threshold, into these weekly wicks, and then just go higher. We don't even necessarily have to do that. Price might not have the willingness to get back down into discount, and we might utilize the discount that's in the premium. What does that mean? Well, if I divided this in half, this whole range right here is actually still classified as a discount. If you do not know what I'm talking about, you can message me on Twitter or on email, and I will send you last week's video. I kind of broke it down a little bit on premium and discount arrays. That's something that we were talking about. But even though this is some sort of premium, because it's above equilibrium, there is still a form in the market that will consider a discount. So all of this stuff can still be considered discount arrays, right? So we have to understand that. And you can even break this in half as well too. So I would be looking to try to, my focus and area is on this area and price and understanding how price could potentially play. And if we do dip down into these levels, what is the reaction if we go below here? Do we close or do we just wick it, right? What is the reaction if we basically come back up into these highs in here? Do we close below them? To me, I would want to see basically price, and if we even just have this in equilibrium right here. Equilibrium of this range is simply just the order block from this high to this low. And if you actually are now utilizing that, this would be your discount too. So now you're breaking down discount in a couple different perspectives. To me, there is still discount to be played in here. So when the market delivers down into here, don't expect price to just come back down to the low. That would be foolish of you because we're already very close to the highs. Don't think it's gonna don't think this is resistance. The market will go higher into 106. I say that with conviction. I say that with experience. Do I know when it's going to do that? No. But as price decides to deliver down into these levels, you're noting already this week, it's not good with ES right now. They're not on good terms. Let's have that. You know, when they're on good terms, when ES goes lower, when dollar goes higher, ES goes lower. You're not seeing that very clearly. And you'll say, Carson, what does clear mean and what does not clear mean? What do you mean? It's clear. It should be clear. When one chart goes up, the other goes down. And if it's not doing that, that's showing you high resistance liquidity. And so when you're seeing dollar go higher and you're looking at ES and it's not going lower, which means it's not respecting premium arrays, you need to red flag, question mark, what's going on? I need to step away. That should tell you that it's not going anywhere. If the market is trending and you're going to get big moves, they're going to do the opposite of each other. Clearly. It's going to be clear. Dollar goes higher and respects discount arrays. ES goes lower and it respects premium arrays. If that's not the case, and one's not doing one and the other's not doing the other, whatever the case may be, take a deep breath and know that there's probably not going to be a move that unfolds yet. That's something that you have to also get under your skin early on. Alrighty, so that's basically me going down into the daily. this is me just understanding, guys, that a lot of this stuff. So now I'm just looking into this swing point now. I'm not too worried about this. This is too far away for me to need to worry about. I need to be focused in on what's going on within the price now. So I'm more so looking on this price lag within this form of discount. I'm understanding why it's discount. I'm understanding how it's discount. So I'm going to go now onto a 12-hour. Let me just kind of at least make this a little bit. All right, so going into here, as I'm looking at a 12-hour, there's really, it's a hard read in here. And you have to know when there's easy reads and hard reads, right? So it's a very hard read in here. I'm looking at this volume imbalance right here, and I like how price just immediately did that and went higher. To me, I would first want to try to understand when I go into smaller time frames, I'm going to be looking at this price leg in here. You can see there's no wick on this candle right in here. So there's no wick there. So I would want to see how price reacts down in here first, because we've already dipped down into our first segment of discount, and we already did kind of tug above this high. So first thinkings, as I'm dipping down into lower time frames, I want to see price play around this low. Am I expecting it to take it or respect it? No, I don't need to obligate myself to price like that, right? I'm being an observer. I'm not being a trader. I'm just an analyst at that point. So I'm watching price around this low. From there, you know, I look at here and I see a double bottom. It's that previous week's low. Aha. What that previous week's low is this easy, clean double bottom. To me, that's nice. Because if we are going lower, let's say this low fills, let's say this low fails, right? Once we get into this low and we see discount areas fail, eyes go here. Notice how I'm planning where my eyes are going to go once certain things fail. And guess what? If it doesn't fail, then where are we going to go? We're going to go higher. So I already have these if-then statements planned out in my head. And now it's just, if they plan out, then this. If they don't plan out, then this. So if we do get below this low, look for 103.750 to be taken. And I think once we get below that, I do think that we could run higher. The reason why I'm saying that is because you have an kind of an imbalanced filled in here. I'll zoom in a little bit. The reason why I say that is because you have a swing point right here, one. There is a swing point right below this liquidity. So if we do, we might tag that liquidity and then run, because we do have a swing point right there. We are in discounts. A previous week's low would have been taken. And then if you even look down into here, we didn't fill it exactly, but we dipped down into it. And if I actually utilize the parallel channel, we're playing off consequent encroachment. So to me, I wouldn't want to see price come back to that level, even though it could fully fill. It's a small gap, and we did respect consequent encroachment of it, and that's a swing point. So it's something that I would be watching. Really, I love the fact that this closure of these downward candles right in here line up right at this liquidity. So if this low doesn't hold and we go, I think we could take this liquidity and then just go higher. It could be a point, it could be a couple handles, whatever the case may be. But I would be looking to see if potentially this swing low could hold. If not, it might just want to kind of fill back down into it a little bit more. And like I said, it could come and, it could come and test this wick consequent encroachment. So these are just areas that I'm thinking as I'm building it from a top-down perspective. I'm just considering it all. So from there, hold on, let me wet my whistle, as Michael would say, real quick. I'll read the chat a little bit. Horizontal lines are good. Yes, they are. May I ask why you used, Vicky asked why I used the 12-hour. The reason why I like to use the 12-hour is it's just a different view on price. It's a half day, right? So the same way you use a daily, I like seeing how price plays in half that day. because you might be able to see something might happen within a specific day where it's going one direction one way, and then the second half of the day it's going the other direction, and it might show me. So the only reason why I have these other different time frames is just because I'm so familiar with how to view price. I'm so familiar with what the free value gaps look like, what the breaker blocks look like, all that stuff. I would also, it's just giving me a view of price. So like another thing that I was about to point out is we have a potential bearish breaker in here, right inside of this liquidity, right in here. So that this candle right here to me kind of acts as a breaker. Carson, why does it act as a breaker? Well, we have a low, we have a high. Oh, don't do that. We have a low, we have a high. We take the lower low, and then we take the high. Sneaky, but it's there. And it's also inside of that is liquidity. And outside of it is that swing low. So we might just come into this breaker and then deliver higher after taking the liquidity. So I've got a breaker into here. I would basically identify this as a positive breaker block. And I would note it on a 12-hour. And I don't really keep all this stuff on my charts, guys. I'm just showing you guys all of it just so you guys can see. And this isn't even all of it, right? This isn't every single PD array, right? I'm just kind of highlighting ones that potentially will be important within regards to my study. So from there, I'm going to basically utilize that. Hold on one second, guys. I actually just forgot. Hold on.
Can I ask something?
Yes, you're good. I have to send a quick text, so I'll listen to you while I send this.
Okay, what you guys, you and Harry, think about the implied fair value gap, which is here between.
Yes, that's something that I'm familiar with it. It's basically it's just a little bit harder to get when you're new. I totally understand it, and it's just if you're new on this stuff and you're already trying to figure out if you're in the middle of trying to figure out a fair value gap in the first place, if you're trying to figure out an order block, if you're trying to figure out a breaker block, it's going to give you a headache to try to go and follow all of those things. If you're a little bit more advanced, like the concept's easy and it's a little bit easier to go and try to find. But sometimes it can be confusing, and the reason why I haven't brought it up yet is because I don't want people to go into some paralysis of analysis when they're trying to just figure out every little thing. It is something that it's new, but at the same time, it's kind of, you can understand why he's doing it. But also, the reason why I haven't brought it up yet is just because, one, I haven't really utilized it a whole lot. I don't really see it a whole lot just because I see other things. It is kind of more of, like you said, it's implied. It's a little bit more rare, so it doesn't happen as much, even though you can go and find places in the market that it happens. It's just something that you need to understand that it's not going to make you $1 million yet. And I'll show you an example really quick on the chart of where it might be. Let me just send this text 1 second. Henry, if you want to touch on that too, you can.
I'm sorry, I just said that because right now Dixie price is
Yes.
sitting.
Yes, it's sitting in it. Yep, I know, it's right here. Yeah, I'll get it. And Henry, you can touch on it too if you want.
I don't implement the implied fair value gap too much, but it makes sense, the idea of it. I mean, the algorithm understands wicks as gaps, so if you are utilizing both wicks as their own gaps and drew them out, in every gap you pay attention to 3 points, just like every PD array, right? The high, low, and the midpoint. So if you see 2 midpoints, then you could expect price to be responsive in that area.
All right, I'm back. But yeah, I see it. It's just at the end of the day too, you have to choose what helps you and what doesn't help you. And if it's going to help you to immediately go and learn and understand it, by all means go and do it. But also at the end of the day, if you're new to this stuff and if you're having trouble learning how to just read a regular fair value gap, it's not going to do you any good trying to go and learn another one. And that's just, I'm speaking to the masses at that point. I'm not speaking to anybody.
Yeah, okay, I understand. Okay.
But yeah, what he's basically saying, and I'll understand it really quick, when you have these two long wicks that are overlapping right here, and you have down closure or up closure below them, what you would do is you would take the equilibrium of both of them, so the consequent encroachments of both of the wicks. So I would basically take this one, and I would grab that wick and I would extend it out in time, and then I would also do the same thing for this. I would grab that wick and I would extend it out in time. And there's a small gap in between those, so you can see there's that. He's identifying that it just closed right at that level. So that's just something that you could note. It's called an implied fair value gap. It's when you have these two longer elongated wicks that are overlapping with closure in between, with the cut through in between. But getting back to what I was saying, I like the idea of potentially this breaker at play with the liquidity in it. But before we even get there, I'll go into it. Oh, also the reason why I use 12 hour is just I'm just trying to gauge price. I'm just trying to get I don't trade on it. I click through. So as I'm breaking things down, I go from monthly to weekly to daily to half daily and then into the 4 hour. It's just an extra little thing that I use. There's no special little caveat to it. I'm just trying to get just trying to get another look at price that wouldn't offer me elsewhere. A different set of candles. It's just another different set of candles. So going into the 4 hour, so a couple things to look at. I know we got a lot going on here. Kind of just reading. So I'm just kind of just reading up. My eyes go down, then they go up, then they go down. I see we've got there's 4 hour imbalances here that are that 25% of the weekly wick. You can see there's some imbalances here. That's below this rebalance that we just talked about. Looking into this breaker block on a 4 hour, we have this big BISI right here. So we have this right in here. Price might want to just re-deliver and reclaim it as well. It would be just re-delivering right into it because we've got these equal lows in here, which is that previous week's low. We have more set of equal lows down in here now that I'm looking into it. So I wouldn't necessarily be too sturdy on the fact of this low potentially a hold because we didn't necessarily get above hot here. For study's sake, sorry. For study's sake, you can see that we do have a SIBI up in here. You can note how it overshoots it a little bit, but candle body closure will tell you the story. Price can't close above this. So as you were watching the dollar Tuesday, Wednesday, Thursday, whatever, as I was watching this too, even though I wasn't really watching the markets this week at all, but when I would go back and kind of look at it, I knew that odds are, after I had viewed this Thursday afternoon and I saw that we did not close above it, we did throw wicks into it. I kind of thought that we could kind of retrace a little bit, and we kind of followed back through. We do have a little bit of a BISI in here that we kind of closed inside too, right there. So where's price going? It's going from one imbalanced area in the market to the next imbalanced area, and it's just re-delivery to delivery, re-delivery to delivery. We didn't close below this yet, so just keep that in mind. I would watch this to study the inversion of it. I would also be watching this candle right in here on the 4 hour, the low, the open, the mean threshold of the candle body itself. Notice how we re-delivered away from the consequent encroachment. So this is another little lesson as I zoom in on the 4 hour. Notice how the delivery from the consequent encroachment, right? Wicked it to the tick and then closed below it, even outside of it. Notice how we closed right at the consequent encroachment. To me, this doesn't really look like it will hold that much, which means this low could potentially not hold. To me, I like the idea that we already just near term took out some form of liquidity without closing above the SIBI, and we delivered lower. And then when we actually did go and test it, we did have a very clean, strong, convicted delivery down into the consequent encroachment of it. So I do think that this low could be potentially taken. There's really nothing too much to read in here as much. That's kind of like a 4 hour to me. I'm kind of just zooming in. Like I said, nothing really changes my thought process here. I just want to know if price could potentially get back down into here, and what's in between here and this low. Well, it's just this chop, right? I don't think it, there's nothing here that could tell me right now on this time frame or any of the other time frames that in this level price could potentially support it. Now it might just take the low and go higher, and that's okay, because if you think about it, you have that order block on the monthly, and we are in some form of discount, right? So I have to keep that in mind, that anything that's in gray is now on some form of higher time frame discount. So keep that in mind. When I go into a 1 hour, basically still sitting here very clean triple lows now. Now that weekly just looks very like this can be taken. When I go into a 1 hour, you do have a little bit more of a stretch on some imbalancing right here. I'll take these off because that was the last one. I'll keep this here, and I'll even just kind of refine it a little bit. Notice how it's a lot harder now to view this on a 1 hour, because on a 4 hour it was very respectful candle closure, but on a 1 hour it's not as respectful. You have a couple candle closures, so you kind of have to have a lenience toward it. Like, you have to be able to be somewhat gray within it. But I will say we do have a breaker right here. This down closure right in here. Question, why is it a breaker? You have a high, you have a low, you have a higher high, we displaced through the low. To me, I view this as a breaker. You can see price fed up into that. So I would be identifying, going into this next week, I would identify this candle. If we do decide to retrace higher, I would identify the open, the low, mean threshold. Those are kind of the main three areas that I would be looking at. Aside from that, you do kind of have a CIBI right in here. So you kind of have a YouTube model type ordeal for all of my 2022 people that love and utilize the 2022 model. You have a candle, you have a swing point low in the same exact vicinity as a free value gap on a 1 hour, delivering away from an area. So keep that in mind. That's something I would think about going into this week too. You very well might not be able to get into here, but you might just only get into here and go lower. So that's something to think about. I note that there's some form of BISI in here. You got like two little tiny BISIs. It's probably where price will draw to. I think it could very easily just come down into here and then immediately start playing into these. Keep that in mind. Try to keep a lot of stuff off of the charts for now and just highlight what I need to. You could also view this. Right there. Price might want to just come, the consequent encroachment of this, which was inverted at one point, inverted again. It was used as an inverted model, but now it would just go back into, now that we closed below it, it would be used as, and I like this right here. This is good because taking it across from the moment this was actually put into the market, this CIBI, the market has respected it beautifully, right? You had good respect to the downside here. Price came up, wicked it with a full fill, still respected it, but then when it closed through, it had clean inversion. You closed above it, inverted down into it, used it as support, and traded higher. And even when we traded back into it following later, we used it as support. Now we're breaking that. Again, use what the market is showing you here. And odds are, now that we have broken back through it, it has shown in the past that this has been very respective either way it is being played on. We closed back below through. I would really like to see price come back into it and respect it and go lower. It has showed me not all times is price going to do this. If I take this one, if I utilize this one, it's not as clean, huh? So you have to know which ones price is really adhering to. And to me, price is showing me in my face that it's been pretty adverse to understanding that either way this fair value gap wants to play, it's treating it, the market is treating it as real support and resistance. So I need to focus in on that. That's something that I would utilize on a 1 hour. Is this Sibi in here? Nothing really in here is too crazy. Going down into a 30-minute, same thing, nothing too crazy.
Carson?
Hello, hello. Is this Vicky?
Yes.
Hello,
I'm
I
sorry.
recognize the voice. Very good.
Thank you. Can you show me how you do that fair value gap drawing again?
Yes, yes. A lot of people have asked me on Twitter, so please share it and pass it around if it's something that helps you. A lot of people do their fair value gaps in different ways. So if you go into here, it's I guess the second to last one, or the second top one, where you have the trend line and the arrows. It's down towards the bottom. It's called parallel channel. And what you do is basically you're just clicking, and if you hold down the shift, it makes it straight. So if you want to hold down shift on your keyboard every time you draw it, and then click it, and then you obviously can click it and drag it, and it's going to make a parallel channel. So in instance, this is kind of how I use it. If I were to go over here, and let's say we were to have a fair value gap right here. Let's utilize this as a free value gap, right? We've got a gap in the market. I would come over here to my parallel channel tool. I would click the top half right here. I would hold down shift, because if I don't hold down shift, then I'm going to be not making a good, it won't be parallel, right? So you have to hold down shift or turn. I think there might be another button that you can turn on, but I hold down shift and then I click it, and then I come down and I line it up with the low, and I click it. And then also, if you have to go into the settings, sometimes the middle one isn't there, so you have to get that middle point. You do click it, you toggle it on, and you can have it be lined. I like to have it be dashed. Sometimes I'll use it as dotted. And you can kind of customize it. And I like to have a little faint background. Some people don't like backgrounds. I just like to have that little tiny shaded area so I can identify it a little bit easier. But I don't like a whole bunch of colors and stuff like that. I'm pretty grayscale to the point. But that's how I use it.
Thank you.
You're welcome. And you can also, if you want, if you have having trouble find it, you can always star it and pin it to your little toolbar. And there's a toolbar around here somewhere. I think my Zoom thing's covering it. But you can star it and it'll pin to a toolbar that is always kind of around you on your screen. And that way it'll always be there. So that is kind of how I utilize it. And there's other ways too. I know people use like fibs for it and stuff like that. It's just up to you. And so now that I'm looking at it on a 30-minute, I just kind of am solidifying the fact that there's another free value gap in here on a 30-minute. There's confluence in here. So I would want to be a student in here, and price delivers into here. When I look up into this area, this is a swing point. All three of these candles, we've got a swing point right here. Breaking structure in here with closure. So that's something to kind of identify to see if price gets back up into there. Same thing in here. I mean, price could come down, and I think price could, when it draws into here, I would want to see this low I would want to see it expand through it. I don't think that this is going to be the thing that throws the dollar higher right in here, but it very well could. So just keep this in mind. That, like, if I'm looking to see this low hold, I'm going to be looking at this free value gap. So I would be looking at this. And then I would also be looking at this. To me, those are the only two things that could potentially keep this thing higher. If not, we'll take the low and then go higher. So yeah, and then I would just break that down, and I would just find confluences into the areas that I'm already going into. So if I go into a 15-minute, you know, a lot of times I'm just repeating myself now that I get into these levels. I'm just breaking it down in half. I'm noting that price did not dip down into this level, right down in here. It wasn't even like an institutional order flow entry drill, I don't think. Just open liquidity. So I want to see potentially price maybe drawing down into here. There might be a breaker down in here somewhere, but but yeah, for the most part, this is kind of this is kind of how I'm breaking it down, is I'm kind of trying to see what works and what doesn't. I'm liking that there's still, as I break this down in here, there's still, I'm not going to layer it over, but there's still this imbalance. That imbalance is still being shown time and time again. We do have another one right here too, and I do notice that we already kind of tested this equilibrium or consequent encroachment, excuse me. Actually, no, we did not. We did not quite get up into it, but there's a gap here and obviously another clear gap here. That's stuff that I would be monitoring. And then, yeah, I would just break it down one more time onto a 5-minute. Unless I was trading, then I would kind of keep dialing down in. But we do already have a swing point, so it might not want to get up in there, or it could be using it as liquidity. So it might just go up, take the liquidity, fill this, and then go lower. Might not even be able to get up there. It might use this up close candle as an order block, and then from there it might just come up and touch it. I do like the fact on a 5-minute though, we do have relative equal highs. So worst case scenario, we might at least just go up into there and then potentially go lower. So just a thought to think about. That's kind of how I break it down in a top-down analysis way. It's just being able to kind of know how to gauge your way down into the time frames and then all the way back out up. So, think about what we started with when we went on a monthly and what everything we were looking at. But notice how I kind of just built a little story in my head, a little novel of these if-then statements that could potentially occur. And I'm utilizing the chart to tell me those things in a sense of where price could potentially unfold. And yeah, you can see if you guys check the comments as well, like people are going in and they're looking. Irvin said, would you consider that a breaker block on the 1 hour or even that 30-minute chart at 9 a.m.? 9 a.m. I think he's looking at this. All right, I think I know what you're looking at. Yeah. I think I know what you're looking at. He's looking at the fact of price made it low, a high, we took out, oh, hold on, let me look at this a little different. Wait. We have a high, a low, we take out the high, then we would just brace at the low. So yeah, you could utilize this, I think, as a breaker. I just don't like the fact that it has that long wick at the end. That's something that you might be able to utilize. I think that's what he's talking about. Hopefully it is. Maybe on a 1 hour it looks a little bit better. A little bit, but it's still a little bit of a harder read. But yeah, you could utilize this candle. I wouldn't want price to trade above the top half of this candle, which is basically around a little bit below the mean threshold of this candle. But it's all, he might see that a lot more clearly than other things. And at the end of the day, both of those things say the same thing. Price should deliver into it and go lower. So that's kind of how I break everything down with regards to time frames. I'm just trying to get a little bit different view on price throughout these time frames, and I'm trying to understand the story that could potentially be told and written as it's happening. So yeah, that's dollar. That's kind of my take on dollar. And I'm going to pass it off to Henry so he can start chatting with you guys on ES. We can get back, we can kind of go a little bit more into top down, but that's how I view it. Like, that's how I go from the top down. And I'm just constantly, and as I would do that, I would sit there with pen and paper in my hand. I'm not going to do it with you guys because it would take time, and time is valuable. But that's what I would do, is I would sit there and I would write all of these things down, and I would just kind of try to figure out a story that could potentially unfold. Henry, are you ready?
Carson, can I just ask a quick question?
Yes, you can.
Okay, so just for simplicity's sake, so just so that I can like wrap my head around the stuff. So anytime the dollar goes up, that means the ES will potentially go down, right?
Correct.
Okay,
Correct.
and then when somebody say like divergence, like, so if they say there's a divergence in ES, like sorry, in dollars, so the dollar is making a higher high, then you would expect the ES to go lower, right? Yes. But if it doesn't, or if the ES is making a higher high at that time, then what you're expecting it to do is potentially it will go down. That's what divergence is, right?
Yes, yes. Divergence is basically understanding when one market fails, when they're in sync. Divergence is basically a little bit of that crack in correlation between the two. that's something to just kind of think about. So yes, sometimes you'll have the DXY where you'll see price take a high, and then on ES you have the same high, but for some reason right there ES doesn't take it, and that's what we would call SMT divergence, and that's showing price kind of tipping its hat to say that the dollar took liquidity on the highs, and then decided to go lower, and this would, because ES failed to take the high, ES is a lot weaker. So you would look for ES to sell off, and that doesn't necessarily mean that, or excuse me, this is actually, you would want price.
You want inverse
You want it to
close.
look like this. Yeah, it would be inverses. So hold on, it would be lows on the dollar. So when ES is doing this, you would want dollar to do this. So if the dollar takes out a low and goes higher, and ES fails to take out, if the ES fails to take out the high, that's going to show you weakness. So it's like, okay, boom, dollar took liquidity, now we're going higher. ES didn't even take any, it failed to go higher, and now it's going lower, and it would be weaker. That's kind of what you would see. Peter raised his hand. I know he is actually pretty well versed with regards to SMT. You're good to talk, Peter.
Hey guys, yeah, just a quick tip. For me, it's a lot easier to recognize or see this inverse divergence because first you look at it's inverse, you know, but if you invert the Dixie chart and look at next to each other with ES, for me it was a lot easier to recognize these divergences. So you guys should try it, should it feel. Thank you.
Yeah, so if you want to start to like maybe compare that stuff too, if you come here and you click
the plus button on the left. Yeah.
Compare, yeah. So you go compare, you could go to E8 or ES, new pane. It'll bring up a pane to the bottom, and you can do candlesticks or you can do line charts. So if I were to go here and I were to go to style, I could use a line chart. And I would be able to kind of understand with regards to how and why. So, you know, you could, if you wanted to split it, so if you were studying it, you could. But I'm trying to see really quick if there's even any some divergence in here. We go on like a 15-minute time frame.
If you go to, can you hear me?
Yeah, I can.
Oh, okay, sorry. If you go to Thursday, there was a divergence with ES and SM and DXY. DXY was going higher while dollar was consolidating. It was a little harder to see, but if you're looking for one, there's one there.
Perfect.
Thursday morning, I believe.
Alrighty, if I'm over here. Whoa, that's not what I wanted to do. Let's see. Find this on Thursday. I'm not even a crazy big SMT guy, but I know a bunch of people are. Let me try to find it. Thursday morning.
I think it was right before lunchtime, I believe, on Thursday.
All right, I think this might be it. So this might be technically considered SMT. The dollar took out a high, and ES didn't necessarily take out a low at all. I don't know if that would be considered SMT or not. I'm not a crazy big on SMT. I use it on smaller time frames more than anything. But dollar takes out a high, ES is not taking out a low. which would mean there's strength in ES, and that's why you see it potentially go higher, and that's why you would see dollar potentially go lower. So I'm looking at this, and then I understand as price is taking out a high on dollar, are we taking out a low on ES? No, that would signify strength in ES, which would signify potential layover on dollar, and that's where you kind of see it kind of go over. I will give it, or I'll get the exact episode that Michael teaches it, and I will send it to you, Vicky, because he obviously will explain it a lot better than I will. Henry, are you ready?
Yep.
Alrighty. Let me enable screen sharing. Getting better at that. You're good. Hello, everyone, by the way. New people that hopped in. I didn't get to say hi to you. Nice to see you. Nice to see everyone here. I'm proud of you. It's Saturday. You could be doing anything that you want to do, and you're here getting better. So I applaud you. I appreciate you.
Okay. So yes, I would start with monthly as well, and initially just take a look at where we are in relation to some different dealing ranges. So we can start by just looking at this larger swing all the way from the high down to below, and see that we've retraced here into the equilibrium point, meaning that we are at a discount at the moment, so below equilibrium. On off here, we'll look at this range. Since we have some energetic displacement lower here, and that gives us this point 3945.75 as the equilibrium. So you can see at different points from different dealing ranges, we can determine different areas of premium and discount, and that can help you decipher, more like short term versus long term, are we bullish or bearish? So based on this shorter term dealing range, we are at a bit of a premium, but just recently traded to the equilibrium, and we know that in a bullish move, when we have a retracement to equilibrium, we don't tend to spend a lot of time in. So what this would tell me from here is that this is a short-term, at least short-term bullish opportunity, which trades up to the equilibrium point of the larger dealing range as possible. So this is an area of interest to me based on the monthly chart. You can see that we touched into there a few times. And then I'll draw one more here. Look from below up to here. I'll actually draw to this one because if we didn't have this information yet. If we go on to a weekly chart, you can see that in this price swing here, so let me put on the trend line to see it. In this price swing here, traded back into the equilibrium, and look at the closure of these candle bodies right here. All of them holding above the equilibrium, didn't spend a whole lot of time down here, and then work our way up to that larger dealing range equilibrium. And then the trend. And I can put it to this range. Using that range, we are trading at a premium. So a short-term premium and a longer-term discount to this equilibrium point. On the monthly chart, otherwise, I don't see a whole lot in terms of PDRAs that would be of interest to me, just based on this price data. You could look at this volume imbalance here. Otherwise, I don't see a whole lot. This could have been considered an order block at some point, but we haven't shown much respect for the mean threshold of it, so I would mostly disregard that. Going to the weekly chart now. And you can see how price has been responsive at this volume imbalance here, 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 here. I'm gonna clear up this. And we traded, yeah, I'll break this down from here as well. So down here, we took the sell side and then traded higher, created a shift in market structure over this high. And established this volume imbalance here. And I think we'll maybe give you a small gap in here. Small gap right there. Very small. That's your fair value gap. Here's your volume imbalance. Shifting market structure over this high, returning to the fair value gap and the volume imbalance, respectively here and here. And then we trade up into this inefficiency that we left up here, this city. Back down into the volume imbalance. From respect for it again here, and then we trade to equal highs on the buy side. And up to that monthly equilibrium point of the larger viewing range here. So now what we're seeing is we're trading away again and again from this monthly equilibrium. And our longer term sentiment on ES has been bearish, right? So looking for lower prices. But I do think in the short term, as the dollar is consolidating and has failed to make that quicker move higher up to the buy side, we could see at least a bit of a short-term move higher on ES before continuing lower to take out all of this sell side resting down here. So from here on a weekly chart, a couple of things more that I would recognize. We have a bullish order block right here, which we trade off of. And notice the consequent encroachment of these wicks as well. Here. This point as well. This was a city that we have inverted. Oops. Let me take that label off. So this was a city sell side imbalance, buy side inefficiency. We traded through it, closed above it, trade back into it. Now we've traded the low and the high and traded away from it. So this is the balanced price range for us. We trade away from it, trade back into it, and now it supports price. Trading higher. So we've got the order block, we've got the balanced price range, we've got the midpoint of this wick here, which aligns very nicely with the order block. And I don't see much else below. I'm going to pay attention to this volume imbalance here. And that is pretty much it for the weekly chart, as for what I'll be watching next. Of course, buy side up here and sell side below here, but we'll go into the daily chart. And this is where it starts to get interesting for me. So we traded down all the way into this area away from equilibrium into our last down close candle right here. You can draw that out as an order block here that we traded off of. Now, what The reason why I think this could trade a bit higher is a couple of things, right? We have daily volume imbalances here and here that have not been revisited yet. So we have inefficiencies above the current market price that have not been redelivered to at all. These have not even had a wick into them in the rest of the body. So this is an area that I'm certainly watching. The one thing that could pose resistance here is the high of this city right here. But the reason that I'm not too concerned with this area is because sell side was already taken down. If this traded this low, made a higher low, and then traded up here, I would think that this could just be a stop run and then trade back to the low. And it could very well do that, but because this low has already taken out, this is a bit of a firmer low to me, since sell side has already been purged. And so I'm very interested in what occurs in this area. Is this going to trade to the high right here? And I always like to think in terms of if-then scenarios, right? Because we can have some expectations for what's going to occur, but we don't determine what the market's going to do. And so you want to have an idea of what may happen. And as price action begins to play out and you can understand the order flow, then you can get on the right side of things. So a couple ideas that I'm thinking here are, does price respond here and begin to trade lower? Or does price move above this high, invert the city, and trade up into these volume imbalances? Those are two potential scenarios I could see. As we get into the lower time frames, you'll see in here as well some more PDAs that could potentially support a price move higher. But this has been left open, has not been redelivered yet. So these volume imbalances will act as a magnet to price. So if we're just looking at things that could potentially stop price from trading higher, it would be this high. It would be the midpoint of this wick. And it would be, if you're looking at this price swing here, we would call that our order block. This has not, at least the opening price of it has not been respected so far. This is a larger order block. If you look at the weekly chart, starting up here, and that's an interesting point to draw out as well. Draw out that open. So, yeah, otherwise, I don't see a whole lot on the bear side. There's this one here, all these different PDAs. We have this inversion idea that this was a BISI to support a price move higher. It balanced here, then it traded to the low and back to the high, then it came back below it. You could see it invert right here and trade lower. But if we do trade above this, then it's going to reclaim their sense. And we could see that secondary play that I was talking about where you trade above, find support here, and then trade up into these volume balances. I don't see a whole lot otherwise that is currently in the way of at least a short-term move high. There are other PDAs up here to watch out for. The city. I'm gonna figure this one. This volume imbalance. And then potentially this seat could be inverted. But now you can see all of these confluences kind of stacking up here, right? So we've got the volume balances to act as magnets. We've got these inefficiencies that could potentially be inverted up at this point. We have this sell side imbalance, buy side inefficiency that has not been redelivered to yet. So these are all areas of interest to me. But what I'm watching for is this key area. How does price respond here? If we start trading lower off of here, then I'm watching for how price responds at these lower time frame periods that we get into right here, because that could support price, then trade above here, and then trade into here. But if these down here are not respected, then we could have the price move lower. If we trade above this city right here, then I would expect this move to play out, to trade up into these inefficiencies up here. So I'll go into the 8-hour chart now. And here you can see, mark this as maybe so the I'll go into the 8-hour. Wait, if you look on the 8-hour, we're trading in this city right here. So we'll take the midpoint and see that that also aligns closely with the high of the daily city, 55.5. Then if you look at this series of up close candles right here, we'll identify that as the order block. I'll take the low and the open, which are the most sensitive price points. Let me check the chat real quick. Oh yeah, sure thing. So you're seeing these areas start to stack, right? These are our bearish PD rates, the city and the order block right here. And so we want to see if price is responsive in these areas to move price lower. And if it's not, then these areas are being negated, which means that we could trade higher into these inefficiencies which have not been redelivered yet. So the last thing I'd note here on the 8-hour is just the high of that city right there. So I know we're starting to get a lot of markups here. But what happens is, as I start to do this breakdown from the monthly to the weekly to the daily to our hourly charts and then down into the lower time frames, I'll pay attention to these areas of confluence and just mark out the most important points for me. And then I'll just keep awareness of where we're trading at the time. So I would like not have this on my chart. I would just have this important high right here, and I'll be aware of this order block. And then I'd be watching this high as well to see how we respond up here at the 8-hour signal. Then that is going to be it for the 8-hour. Go into, oh, you know, yeah, I'll go ahead and put it on the 8-hour. I think it's a bit clearer on the 4-hour, but here we have a low, high, a lower low, and it's traded through. So here's your bullish breaker on the 8-hour. We're going to the 4. Again, your low, your high, your lower low. So we can refine this breaker a bit. And then this could be a sort of mitigation idea as well. If we trade above and back into it here, you can kind of see that once price traded above here, above this swing, the high of this candle is 40.34 and a quarter. And then the low of this candle here is 40.34. So this was a chance for anyone who was short in here or shorting right at this high to mitigate their short positions and cover right here. That's the mitigation block before price trades higher. So if they're on the wrong side of things, they're short and prices continuing higher, they can mitigate the position right here at this high before it trades further against them. Let's see what else here. On the 4 hour, on the 4 hour, we've got this city right here, which we've now traded above and could be a point of inversion. We trade back into it now. And we also have this city right here. And then we have this buy side imbalance, sell side inefficiency, which aligns with this mitigation block here. So if we're looking at potential if then ideas again, and feel free to stop me when you have questions about anything I'm showing. We could trade into here. We could, if price doesn't even come to here, if it stops and inverts this idea and then trades higher, that would be especially foolish. But if we trade it lower into here, and then trade back to this high, we could trade up through, invert the city, and then trade up into the inefficiencies that have yet to be delivered. We could also trade here, trade to the city high, and form a breaker and trade lower. So while I am expecting these areas to be delivered, it's important to see how price is responding up here, because we want to see what the order flow is and then get on the right side of it. But at the moment, given the situation with the dollar, I am expecting it to trade through those highs there. These highs up here that we're talking about and into this volume imbalance right here. But with all this consolidation, and now we have the equal highs down the road, also mentioned those, or equal lows, excuse me. I do think we could expect at least that short-term move higher on the ES. And so if we're going to make that short-term move higher, I would expect a little bit of a move lower first. So that's why I'm watching this area, and our breaker down here as areas where we could actually trade to early in the week and then make the move higher. If these areas do fail and invert, then that idea could be incorrect, in which case we would start moving lower and the dollar may go ahead and attack those highs. From here, And that's the 4 hour. I'll go into the 1 hour. I think this is probably as low as we would need to go. It's the 1 hour. So you see here we traded into this and ended the day higher. And this was the final target that I had on the weekly. Look right here. So in order to make this efficient, it has to be delivered to the sell side and the buy side. And so we're trading up toward this low right here, which we have, which is also the daily city hall. We got some relative equal highs sitting up here. And then if we do end up inverting these, then we have the relative equal lows down here. But I'm not really interested in that at the moment. I'm short-term bullish on this, so this is the most important area to me. This area of confluences, and then I'd be looking for us to trade up into these daily volume imbalances and the daily city. So I just want to see how we respond in these areas, and if we do confirm the bullish order flow, either here or if this inverts and we trade above this high and this tends to support, then I would expect this move to play out. But if these start to fail and potentially invert, then that idea could be entirely. But this is what I'm expecting from now. Person, you have any thoughts or any questions?
I'm all good there. I'm all good there. Hopefully
Right,
everyone else is.
Yeah, if you have questions or want to point things out on the chart, you can look at it on ES. If you have a different idea of what's going to happen, I'd love to hear it as well.
Eric, can you hear me?
Yeah, I hear you.
Two things. I'm gonna go over one thing really quick, and then we can go over trades of the week. Actually, I think it might be better if we go over just trades of the week. Do you want to go over? You don't have to go over all of them, Henry. You can handpick whichever ones you want. You can dive into a little bit of some trades you took this week, why you took them. I only had one day of trading, and it was pretty short and sweet. But I'll kind of explain it too. And then after that, I'm going to give one example of what I want you guys to potentially go and try to this week, maybe go and try to find. And it's dealing with the dealing ranges and the extensions and deviations following that. There was a very good, clean example that happened this week of it. And that's why this week, or not this week, but that's why as much as you might see on my Twitter or Henry's Twitter or things on this call, each week my goal is to show you that there is more. So there's other things that are being implied, and there's other things that are kind of behind the scenes that might not be talked about, and that's why each week I want to try to bring them to fruition. Yeah, do you want to go over your trades first, then?
Yeah, let me see if you actually want to do yours first, because
Okay, I figured you didn't want time.
I didn't have any recordings from this week. I only have my screenshots.
Okay,
so
that's fine. I'll cover this really quick, and then you can do it. All right. So what I will do first is I will show you guys my trades. I guess this week. It was on Friday. Both of my losses this year have been on Friday. Is that a coincidence? No. But it's okay. It wasn't even really a loss on the day. It was a break even on the day. Real quick, this is the executions because the video goes very fast, I know. But basically, I will show this. So these are the executions in the morning, right? In most cases, this is a good trade. But when you throw life on top of it, so the morning on Friday when I was looking to go long, I had a feeling that we weren't necessarily going to bottom, or we weren't going to lay over on ES. So I was looking to go long. I was playing off of a 15-minute BISI and a 15-minute breaker. My original entry is in here. I was having internet issues, and I typed that in before my internet even actually cut out. But my internet cut out. I was able to take a partial above a high, and then I had it stops roll to break even. And then once my internet cut out, obviously my break even got hit, which was a blessing and a curse. But we came back in and we just reclaimed and retested, took out the prior 930 liquidity, and then traded higher. My internet came back on as we were pushing away from an institutional order flow entry drill. So I was playing this BISI in here with regards to price trading above this high. And you can see at one point throughout this, I went to go set a sell limit and accidentally sold. I was in profit, but I wasn't trying to sell. I was trying to set a sell limit and just was rushing. I'm already not in a comfortable mindset. My internet cut off. I'm feeling as if I got to catch back up and I got to gain ground. So I'm already just not there, right? I'm not 100% there. I might have been 80, 90, doesn't matter. I wasn't 100% there. So I'm buying in here, and then I'm trying to reprice as it goes up into here. And I'm thinking that we might be leaving the station. So I add into here. That was an error on my part. Probably shouldn't have done it, because if you'll see in the video, I'm waiting for a test down here. I literally say it. And I tell you right here, I say I don't want this to be filled. I'm waiting for a test. And just because of everything that was going on, I had things going outside of trading, people that are trying to get a hold of me, all this stuff. And so I'm just not on my game, right? And so, I had a little too impatient entry in here, but I allowed my stop is still below this level. And then we kind of played in here, and I'm pyramiding as well. I'm waiting. So I wasn't fully as patient as I usually am. And then, so all of these entries get stopped out on this candle right here. As we kind of started pulling up into this level, I'm kind of trailing. I think my stop was either at this low or any of these lows. This stopped me out right at the end at 11 o'clock, right after that 11:10 hit. So I was thinking that maybe the 1050 to 11:10 macro would throw price higher. It wasn't until really lunchtime. I was not allowed. I don't trade lunchtime in the first place, and that can be a good thing and a bad thing. But even if I was going to trade, I couldn't. I had to go somewhere between 11:45 and 1 o'clock on Friday, and because of what happened in the AM session, I just didn't want to trade the PM session. So you can see either way, I was able to get a little piece out of the market. I survived the market. I handled it responsibly, but overall life in general just got in the way, and I just couldn't with regards to, I probably would have held this and let it breathe a little bit more had this happened at 9:30, but because I knew I had to leave at 11:45, I'm kind of already throwing my stop loss at break even at that point. And so when it comes back down into this level, it didn't have enough time to breathe. Was I wrong? Not really. Price did what I wanted it to do. You can see it would have hit my partial. You can see it would have traded to my terminus. But you can see that a lot of this stuff was more so life. The trader, the human behind everything that's going on, that controls it all. I press the buttons, I shift the gears, I do it all. And if I'm not fully there, I'm more susceptible to errors. Even though I'm already susceptible to errors in the first place, it's just amplified now. And there's weight lifted off your shoulders when you can be honest with yourself and admit it, and at the same time too learn from it. But more importantly, the lesson I think that should be learned is, if you're gonna have days like this, do it responsibly. Don't have it be a detrimental day to your trading, right? Like, there's no need to do that. So I'll go into the video now. So these are my initial longs. The first ones of the morning at 9:30 open, 15-minute BISI, 15-minute breaker. I want to see price expand through it. That other breaker. Notice how we respect it. That's okay. We just traded right back into the same area where I bought at. News is it's 10. I'm expecting higher pricing. Price expands. Notice how I'm saying studying the inversion, taps the top of it, and then goes. That's the order block in which I will extend out in time over time. And if you take this video and you go look at what I posted after it with the screenshots, a lot of that is basically stuff that I'm using. Now, I said in most cases I would pyramid. If I don't, it's because I'm having trouble with my internet. So I was already able to take a profit. Now that's where my internet cut out. So it's a rollover on it's a new video. I'm letting you know the internet cut out. I had to collapse the trade at 1%. You can see where I originally was buying it at, and then news event came. News event actually just came out just to take out the 930 low. I got stopped out at break even, but I was able to gain a partial. This is now where price is coming. This is where I'm coming back into price. So this downward movement already happened, and we already traded back above here. And these were already at places in which I was already eyeing as well. So I'm already right in here. You'll see I don't want this to get filled. It did not get filled. I'm using this as the institutional order flow entry drill, and I'm wanting price to trade into this order block. Always letting you guys know that it could run without me, and I will let it run without me in some cases. And you can just tell the impatience. So I get my first entry in, I put 2 in there, and in reality I want it to go into the consequent encroachment, and then I'll put another 2. But you can tell when I'm not on. Already right there, I accidentally sold the market. That was unintentional. I was trying to set a sell limit up here because I'm going fast and I'm being impatient. That's just another error I added on top of it. So already there, things are kind of piling, and I kind of know this stuff in the back of my head. I can kind of feel it at this point, but I'm already committed, and I knew that it was going to be a good lesson for someone out there. All right, and so I'm identifying the macro, and I'm understanding that because I had already sold another one, I'm just already a tad bit more impatient to get back in. So I immediately just buy back in to cover it because I'm not too worried about the exact entry. I'm wanting price to dig lower into this BISI, into this order block, and then I wanted to add another 2. And you'll see how I kind of misplay it, even though I still do. That's me saying I want it to test down there. I would prefer that. But as we kind of start to trade away from it, I think that we might be gone. I don't have as much patience as I usually do. Trying to see how it acts on it, and then I'm using this was the bad read. So this was the biggest error that I think I've had the entire day was a misread on this order block. To me, I thought that this down closure, because of how price is kind of in seek and destroy in this area, I thought we were going to potentially hold this low. You can see me start to move my stop up. I believe it didn't give me it. I'm thinking that that's the run, so I'm going to try to pyramid when price comes back into this level, and I'm trying to use this as a low resistance liquidity run. We weren't in high resistance though, and that's when you get this. So that was not a good entry on Carson's part. I'm identifying that it might still give me what I originally had thought was going to play out. I'm letting it still breathe though. I put my stop loss below the free value gap. This is me giving it to me, but because instead of the ideal was going to be 2 when it first hits in here, and then 2 down here. But because this did not necessarily play out in which I had that extra one, that's why I circle it, because that's me identifying and letting you know that's a mistake on my part. I shouldn't have done that. So I'm identifying right there. I'm circling it and I'm saying that's not good. I see that and mentally know it, but I'm letting it just play. I accept the risk. It's not going to blow my, just that extra loss. It's not going to blow my account, whatever. And I was already up 1% off of before my internet cut out. From there, this is what my idea is as we're going into the macro. And then basically from there, just needed more patience for the macro. So I'm telling myself I've got 1 and 2 right here, 2 right here, and then 1 and 1 in here. So I have 6. I have 6 contracts total, and I'm just trying to play this run into here. This is the only day I've traded this week. That's the reasoning behind 6 contracts. I was going to take 3 off at the top and then 3 at terminus. And I knew that if we were not kind of doing it by the end of the macro, odds are I was going to take a loss. And I mean, it's only a 10 tick loss at this point, right? But all that at 11:10, it's one candle that goes and takes it all out. See right there. So really quick, and I know it goes fast, but this candle right here took me out 10 ticks, 6 contracts, and then from there we came right back up. So I'm gonna now go back in at a half initial risk. Now I'm only gonna use 3, and I'm using that as the low. And remember, I've got somewhere to be at 11:45, 12 o'clock. So far, I took 1% gain and a 1% loss. Still, no need to overshoot a risk. No need to overshoot risk following a loss. So now I'm reading this as an order block, and this is me kind of understanding that we very well could start to run now. But because I had to be elsewhere, I'm letting you know I don't like price action. Might call it even. We will see where we are at 11:30. Added another contract. Wasn't going to do more than 4. I was going to do 2 partials, 2 terminus. And then I basically am telling you at this point, as it starts running away, I'm not going to play with it. Risk is off the table. I'm either going to have basically a break even small profit day, or I will be able to get it as it runs. No need to fight it. It either goes or it doesn't. And you can see right at basically at the time that I needed to leave, it takes me out. I bumped it up 5 ticks, cover costs and commissions of all the entries. Break even day, sometimes you must survive, not going to play on anymore. Basically a break even week, and happy Friday. That was my trading this week. Henry, if you are ready. Yeah, you're welcome. You're welcome. That's why I do this stuff.
Hey, Carson.
I don't. I mean,
Can I ask a question?
Yes, you can. Yes, you can.
So I know I've seen you mostly trade on the execute on the 1 minute.
Yes.
I have a problem with over trading. Every time I'm kind of on the charts, I constantly see what looks like setups. So I just wanted to ask you because I noticed you don't take like loads of trades every day, kind of on the 1 minute. It's like only a handful every month. So what would you say separates kind of, I guess you're waiting for like more high quality, right? More high quality trades. Like what kind of are you looking at that kind of you can avoid all those high volume trades?
Yeah. One, I saw something, I can't remember where I saw it. And there's a trader, I think it is Jade Cap. I think he's talking on one of the things. He keeps 3 poker chips at his desk. 3 poker chips. And it's kind of like how I kind of go about it. I trust myself, right? I'm experienced. I've been doing it for years. I've proven to myself that I can do this. When I see price, there are things that I see and it repeats itself. So when I go into the market, I like to not just, I would prefer not to always be in the market and having a little here, 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 a little risk, a little risk. When I go into the market, I'm gonna risk 1%. As small as my stop loss may be, it's the understanding and the experience. I'm okay with that. I think I'm very selective because one, I try to trade within the higher time frames, and I know when I'm not, and I know when I'm either trading against it or with it, and sometimes I will accept trading against it, but most of the times I can see when and why. I look at the dollar a lot, so I understand when the dollar's going and ES follows the direction opposite of that, and it's following in what I believe is in the higher time frame order flow, and I have a clear draw on liquidity, and opposing liquidity has been taken out before the draw on the main liquidity. There's things that I'm factoring in, and as long as there is some sort of volatility in the market, it doesn't really matter what it is, what news event it is, a lot of that. And then also, I'm very, very, very picky on myself and how I feel. If I do not feel good, and if I'm not 100% dialed in, I have days like I had Friday. you guys can kind of hear a little bit of my throat. I have just allergies. You know, I'm just haven't been 100% there. And I've learned you you are the most important factor. It's not the free value gaps. It's not the breakers. It's not you. You have to be on tippy top shape. And if you don't feel that way, you have to be honest with yourself. So a lot of days, I'm you a lot of times it's just trigger happy people. You're just trigger happy. You're just wanting a result. You're wanting an outcome. And at the end of the day, an outcome is an outcome, and there's always another one. And so once you can get over the trigger happiness of it all, and just sitting there and needing that emotion and needing that chemical body release, once you get over all that stuff, you realize, one, I want as many ducks in a row as I can have. I need to have in a row. How can I get myself, like, I can trade. I see the charts. I can go into AUD JP. I mean, it's closed, but I could go into Bitcoin right now, or Ethereum, or AUD JPY, and I can probably gauge what it's probably going to do. Like, I don't need to, I can go on a 1 minute, because 1 minute, you don't even need bias, right? It's just delivery to redelivery into liquidity pools. But when you're trading with higher time frame bias, it's a lot more confident. And what might get you on a day where you're consolidating or you're not trading with bias, you might get 5 handles, 3, 8, 10, maybe 15. But when you guys go and see me on certain days trading with higher time frame flow, I'm getting 20 handles, 25 handles, sometimes 30 handles. There will be days this year, I promise you, when I will grab 40 handles in a session, 50 handles in a session. Maybe not more than that, but I don't need any more than that. But I'm allowing myself, that's why my trades are bigger. And if I'm already identifying a larger draw on liquidity with higher time frame direction, and I'm ignoring a lot of the smaller stuff, one, I don't have to trade with as much leverage. I don't need as many contracts. I'm eyeing a longer move. So that takes some stress off. If you could see back in like Friday's trade, I was trading with 6 contracts, but I was only aiming for, I think, maybe 10, 15 handles. But there will be days where I'll trade with 4 contracts and I'll go milk 30, 35 handles with a 90 tick stop profit, trailing it the entire way, just reading price, knowing what low to put it under, knowing what fair value gap to put it under, knowing what breaker block. And so a lot of it is tied to being able to, what is a bad read on price? What is an easy read on price? What is the higher time frame? Is there a clear draw on liquidity? Has the opposing liquidity already been taken out? And then from there, I also, like, I'm open. I know people are new, like, I'm not a full-time trader. I have a job. I have a very nice flexible job that allows me to utilize this stuff through it. I have my own office, but I have a work phone, and a lot of times that work phone will sometimes ring, and I have to know that I have to pick it up and answer whoever it might be. And so I'm human, right? I have a job. I don't necessarily need to be a full-time trader right now. I'm 23 years old. I might as well utilize the extra stream of income. It helps my emotions on the charts. It makes me realize that I can lose and be fine. Even though I don't lose a lot, I lose. And so I think when you realize that you do lose, and you don't mentally in the back of your head think that you're just going to constantly win, when you know you're going to lose, you're not going to trade as much, right? Makes sense, because that's your money. And it will start to be a lot of money as you grow in this stuff. And that's what I said in my tweet. I was like, no one says you have to risk money every week. You can demo trade if you need to scratch the itch. You can live tape read or not trade at all. I like to think that most traders should stay somewhat in tune with their markets no matter what, but you don't have to live tape read every week. But when you know that you're risking money and you know that you do lose as a trader, and you know that you're trading on a big account and that's a lot of money, whatever the case may be, you're going to sit there and you're going to realize, I'm not going to trade as much. I don't need to trade as much. I trust my analysis. When I go into the market, I am strong with conviction, knowing that odds are 80% of the time, 90% of the time, I'm going to take something from it no matter what. I'm dialed in, I'm locked in, I'm an experienced trader, but at the end of the day, I'm humble and I understand that it is a $1 billion market that I'm going against, and I do not run it. I do not own it in any way, shape, or form, but it also doesn't own me. It doesn't own me. The market doesn't tuck me in at night, and it doesn't make me my breakfast. It might pay my bills, but at the end of the day, it doesn't own me. I get to decide as a person. And so when you really start to live with that inside of you and you know that you will lose, then you realize, why am I just going in to what? You're just trying to feel something? Like that's really what it is when people are just trigger happy, they're just trying to feel something. They're just trying to and I get when you're learning, you do it a lot more. I did it too. And what you're trying to do is you're just trying to feel right. You want to feel like you're doing something right. You want to try to prove to yourself something. If I press this button and I get some form of reaction, I can then tell myself that I'm learning and I'm getting better. But are you? Are you? Because even if you had $1 million in an account right now, even if I had $1 million in an account right now, all that stuff has factors into it. And if you can't treat $100 like if you can't treat $100 like you would $1 million, it's gonna have you're gonna have the same outcome both ends. Both ends are gonna be the same. You're gonna have the same outcome as you would if you trade $100 like you would $1,000, $1 million, $10,000. So that's just something that to think about. Like I know I'm gonna lose. I also am busy outside of trading, so that keeps my focus elsewhere. That keeps me from not necessarily trading all the time. But then when I know that I'm not busy outside of trading, I dial in. I might have 4 trades in a week. I might have 5. Sometimes I'll have whatever the case is, not more really than that in a week. That's like pushing it. But there are weeks where I won't trade. There are weeks where I'll have 1 trade. There are weeks where I will come out and lost. There are weeks where I'll come out break even. There are weeks where I will have wins and I'll come out profitable. There'll be big weeks. There won't be, but what you won't see is big losing weeks, big losing days. There's things that you can keep from occurring, and those are certain things. So hopefully that answered your question. Really quick, unless Henry, are you ready to roll?
Yeah, I actually do have one recording from the,
Okay.
but go ahead if you have something else to share.
I was just gonna go over the example of the deviations, but I would prefer you go first.
Okay, I'll share the one recording I have. And if anyone wants to see the other ones, you can look on my Twitter. All the executions are there with the markups. So
Yeah, you're all good.
go share. Okay, so this was on Monday, the 27th. So initially I'm looking at DXY here. And what I see from this is this blue line here is the rejection block on the daily chart. So we've already traded up into that. We've traded up into the midpoint of the wick. And in trading up to it, we also purged buy side liquidity. So now I'm thinking we took buy side and we were going to trade the sell side. So I marked my equal lows down here. And we're coming into the 9:30 open. So if I think this is going to trade lower, what I'd be expecting at the 9:30 open is a Judas swing higher and then trade lower, meaning that I'm expecting the opposite on ES. So I expect the Judas swing lower and then a genuine move higher. Let me see me type that out here. This would be a bullish Judas swing on DXY and then a price going lower. So I'll be looking for the opposite to occur on ES. Now I'm over on ES. I'm marking out my buy side levels. And I'm marking out here 15-minute and 15-minute and 5-minute. And let's see, put the 1 minute as well. Fair value gaps. We did just trade up into this imbalance right here, but we've got these relative equal highs and more buy side right here. And we're trading this orange box here is the daily volume imbalance. So you can see how we're respecting the low of it here and here and here, and respecting the high here. So I want to see if we can reclaim this and then work our way up to buy side. But first, I want to see the Judas swing. The fake move lower into our fair value gaps, and then higher. So this is DXY.
Was this Monday or Tuesday, Henny?
This was Monday, 27th.
All right, thank you.
Now we're starting to move higher on DXY and lower on ES. I'm marking out the equal lows on DXY. These are, oh, too far. I've got the NASDAQ right here, the Dow here, the RTY, and then the DXY down here on the left. So not a whole lot happening initially, just prices being held in a consolidation. So I'm not being too quick to act. I still want to see a more meaningful move happen in either direction. Now the indices are starting to come a bit lower, and DXY is still consolidating. If you look at the daily chart, DXY consolidated all week long, so a lot of these ones were more high resistance, while DXY is being held in that range. So I'm trying not to be too quick to act on anything without seeing a clear move. Now DXY is starting to come lower. It didn't trade all the way up into that fair value gap as I was expecting. So I'm not seeing a whole lot of confidence for any trade just yet. Now it's taking those equal lows on DXY. All the indices are still just range bound in consolidation. So I'm still expecting here for DXY to trade a bit higher. You can see here, NASDAQ is putting in a lower low, and so is the DXY, which means we're starting to see a bit of an SMT here. So as NASDAQ makes a lower low, you'd want to see DXY make a higher high. If it was going to continue in, if you were going to see market symmetry. So we're not having market symmetry. We have a lower low here and a lower low here. Still just waiting. Here you see the Dow trade above this city. And now take a look at this. The NASDAQ is pushing down and the Dow is trading higher. There's no symmetry at this point. Now, did you see that on the Dow? We traded above the city, creating a BISI right here, and then traded back into it. That's institutional order flow, entry drill right there, and needs to trade higher. As the NASDAQ continues to trade lower. So I'm not seeing any market symmetry. There's a SMT between NASDAQ and YM. So NASDAQ made a lower low and YM did not. And DXY is not making higher highs as the indices are making lower lows. Or NASDAQ and the SM. So no symmetry, lots of SMT happening here. And then what I've seen here is now this is a 3 drives pattern on yes. So what that means is we have a drive down here into this buy side imbalance, sell side inefficiency. Then this drive is lower, so it purges sell side liquidity right here. And this drive is lower again, purging this sell side liquidity. So we don't need to take out a low like this because we're taking sell side again here and again here. All inside of this fair value gap right here. So now I'm just waiting for, this was the Judas swing I was talking about. So we got the juice swing lower on ES, and now I'm looking to buy side. So first I want to see displacement occur. Right there, as soon as we break this high, it doesn't matter if it closes above it. As soon as it's broken, then we have a shift in market structure. I'm marking out those equal highs here and this fair value gap. Then I enter long right there. And notice where my stop is placed. It's under these series of down close candles, under the mean threshold, and it's under this volume imbalance. So I'm allowing it to trade back down here. And you see how it respects the low pretty cleanly of the daily volume imbalance. That's immediate rebalancing right there. So we trade right back into the high of this candle and then higher. Trading the sell side and then the buy side. I'm starting to slowly trail my stop up as it moves in my favor. Not too far. So I'm still allowing it to come back into the 0 box. And then right there, that's when I go break even. Because now this has taken out buy side and traded back into this inefficiency where we traded lower before. So at this point, this is a potential turning point where ES could turn around if I'm wrong on this idea. So now I'm going to break even, but I'm not jamming it all the way up here. I'm still allowing this volume imbalance to trade, this volume imbalance, this breaker. We've got a low, high, lower, low. So that's the breaker. Here, this order block, you could draw that out. So I'm still allowing this to trade. Drawing out that buy side. The daily volume balance was inverted. And now I'm looking to a 15-minute chart. And what you'll see right here, I moved my stop loss up here in case this run, or my take profit, excuse me, in case this runs straight through here to it. But what I noticed here on the 15-minute is this big wick candle right here. And I'm viewing that as a rejection block. And so that's why I'm actually interested in potentially closing the trade right here, just at these highs. And that's roughly where I have my take profit at the moment. Now this is a premium array, so I'm looking to see it inverted once we trade above. One more time back into this fair value gap right here. We trade right to just about the consequent encroachment of it. I'm doing a couple of projections here to see how far this could potentially run through the high. And now right there, we're trading at the rejection box. So I just decide 10 handles, be content with enough, and I'll take it. And this ends up trading up, I think, just to this buy side level right here, and then actually reverse again. So, yeah, right there. I think that was not. That was either the high of the day or at least high of the AM. So that's something that I've been focusing on lately. Is it's important to have a goal, and it's important to know when to be content with enough, right? Because ultimately, we're coming into the markets to make money. We're not coming into the markets to show off or to be right or to boost our ego. You don't have to be perfectly right in a trade to make money. You just need to be right long enough to close your position and profit. So
and you can be dead wrong and still get out alive and not even lose.
Absolutely, absolutely. So have a goal in mind and know when to be content with enough. know what you want to aim for in the market every day. For me, I try to, and you don't need to trade every day, of course. I try to aim for 10 points. That's my goal. So if I get the 10 points there, then I'm willing to take that off and accept that as a nice day. And then I didn't trade anymore that day.
Think about this too, guys. Put this in scenario. Two different types of, me and Henry are very similar. He might want to go in and he might say, you know what, 3 days a week, I want 10 handles. He goes and gets 10 handles 3 days a week. Throughout the week over, he gets 30 handles. I might trade once a week and I might go for a 30 handle move. Who's better? Who's worse? That's not the question you should be asking. We have the same exact outcome, but because he has a total different life, you live in different cities, you're different human beings, he has different time commitments than I do, different job, all this stuff, we're just different people. He figures out a way to go and get what he wants to get within his emotions, his emotional capacity, all the stuff that he has to factor in his trading. He finds a way to make it work the same way I do, right? And that can change over time. And the only way you know how to work within it is to work in it and figure out what doesn't work. The last thing that I'm going to be going over this tonight is really before we, I'm going to try to leave a couple minutes for open floor. I'm going to give you guys a little bit of a little kind of homework assignment in a sense. It's something that I'm going to be utilizing too. So I'm going to show the screen really quick. Month 8. It is month 8, I believe, episode 3. If you can see right here, it's ICT talking about the central bank dealer's range. What I'm going to most likely do, is I'm going to show you an example of what this looks like on this week in ES. I challenge you, because it's very easy to do, because all you need is time. You need to figure out where price was the day before at 2 p.m. into 8 p.m. I'm curious as I'm looking into this stuff, because in Forex you want anything less than 40 pips and you prefer 20 to 30. Anything larger than 30 can tend to be unfruitful for actual real projections. Taking pips into handles is a little bit different, so I'm very curious to know what you guys' take after you guys go do some of this research on your own. Let me know trading within ES what that handle range might look like. What's an optimal handle range that you're wanting to see price trade in between 2 and 8 p.m. What do I mean by that? If you have a small range in between 2 and 8 p.m., there's utilization there, and I will show you. This one's about to be good. I'm going to go back to Wednesday and Thursday. If you can see my chart, this highlighted area is basically Wednesday's price action, but more so it's in between 2 o'clock and 8 o'clock. So I'm going to take the high and low that forms in between 2 o'clock and 8 o'clock, and I'm going to do two things. I'm going to project 1 to 2 standard deviations below it. So I'm going to take the range, and you can see I basically, I have just one, because usually it's 1 to 2. That range is now deviated below us 1. You can see price manipulates to it and trades to the exact deviation of what the dealing range was. But even more key, price does that before trading higher. So the initial direction going out can be viewed as manipulation, and if we're going down, if going down is manipulating, then expanding and trending would be going higher, right? So think about this: we go down, and we're looking for price to reverse. In this case, 1 to 2 deviations below us. So we have 2 to 8 o'clock, and it goes down 1. Note that once it hits that deviation right here, that low holds. It has now gone 1 standard deviation below what it was in between 2 and 8 o'clock. But here's the cooler thing. Identifying where price could trade for that day. Now you need this to already happen, so this is stuff that you would be utilizing going into Thursday. So if I were to actually be utilizing this, and you want to see how it would be applicable, when I'm going down in my charts and price is trading into here, this is around 8:30, 9:30. This is 8:30, 9:30 on Thursday. No, I could not play this. I was actually very busy this week, so this is not stuff. But this is some stuff that I factor in. It takes me 5 minutes to find this stuff. It should not take you long to find the 2 o'clock to 8 o'clock. But that's something that I'll glance at. oh, I'll glance at it and I'll see if in between 2 o'clock and 8 o'clock the day prior, if it's a small range, I can utilize that. So what I'll do is I'll immediately look to see where it went to first, coming outside of 8 o'clock. In this case, it went lower. So I'll measure 1 to 2 deviations. For this case, it was only 1. 1 to 2 in most cases is probably where you're going to want to see a turnaround. In this case, it was very clean. It gave us 1. So it fills the full standard deviation. And then I'm looking for a turnaround. You can utilize any of these little highs in here as a break in structure, whatever you want to view the chart as. But knowing that price is coming off 1 manipulated deviation down, where can I look at to see a trade? Notice how within that day, it's not things that I'm expecting that week, whatever, or, you can, more so, yes, the week, the rest of the week, whatever the case is, but even that day, I'm looking for -1, you can see it hits. -2, you can see it hits. -3, you can see it hits. And you can see even 4. So the second half of the week on Thursday and Friday, price is utilizing these ranges based on what happened in between 2 and 8 o'clock. I'm taking the low in between 2 and 8 o'clock, fibbing it up to the high, and using these negative projections and extensions to identify the dealing range extensions and deviations. So what I challenge you to, and what is the handle range of this? Well, the low is 39.4575, 39.45, 39.65. That's about 20 handles. So to me, anywhere in between 20 handles, 15, 20, 25, maybe 30 handles max, if in that time price has a 15, 20, 25 handle range, study this. Let me know what you think. Let me know what you get out of it. Identify where it trades to immediately outside of 8 o'clock. Use that as potential manipulation for wherever it might go. Use 1 to 2 standard deviations of it. And then from there, on the opposite end, study projections and how it will follow through on the week. If you are trading more than just session by session and you're holding trades, you can get very good solid trades in here. If you're trying to figure out, Carson, how do I get 60, 70, 100 handles? 100 handles was basically offered in this move right here. If you're targeting this -4 extension off of Wednesday's central bank dealers range, that's how you get 100 handles. You find an entry Thursday morning, independent of who you are as a person, you hold. If you can sleep with trades in, whatever the case is, and you can hold, or you can have partial. Those could be your partials. This is a 15-minute time frame. So just because I'm utilizing the 1 minute doesn't mean that I'm just only utilizing the 1 minute. This is something that you can factor in, and it doesn't even have to be in a trade. Come Friday morning, I was targeting 40.45. There was a reason for it. There's highs that you might look at, but also I understood this level. I was targeting 40.25, 40.35, 40.20, or 40.25, 40.35, 40.45. I think was my terminus. And that was my terminus. So when I'm buying in on Friday, I'm understanding that once we get here, we might not go further. And if we might retrace, we might just kind of hang around. You can see we overshot it a little bit, but it's pretty good for government work if you ask me. So that's something. Did you find that 2 to 8 p.m. is true to futures as well? I had that debate with Kurt the other day, or without me. I mean, I'm just now kind of starting to bring it back into my study, so I will let you know. But yeah, I mean, if I'm looking at this example, I would say, yeah, it's definitely there. I would definitely count on it being there. It's just all dependent on what exactly that range is going to be. Is it 15 handles, 20, 25 handles? Then yeah, I think that you might be able to utilize that. This is something that I'm going to be starting to go and study a little bit further. I used to utilize it a lot when I used to trade cable. If you don't know what cable is, it's pound GU. When I was trading the pound, I would utilize this a lot. Kind of got off of it a little bit. It's just something that kind of lingered, and I wasn't. When I mean got off of it, I'm just something that I'm utilizing within my trading, which means as I'm going through and I'm looking at pre-market stuff or post-market stuff, it's something that I'm adding in. What did we do yesterday or after close? What did we do today in between 2 and 8? And I'll look at that. I'll see how big the range is. I'll look and see where we might go. And the good thing is you can see it all. So I'll see what that -1 or -2 extension might be, what the deviations lower or above us with manipulation might be, where that might line up, stuff like that. Just something to add on top of your trading. I do have to be somewhere around 6, but I am going to open the floor for any questions that you guys might have. It doesn't have to necessarily be with this. It can be with anything that we might have covered. I know we have some new folks in here. Some people are kind of dropping off as we get a little bit later. But this is open for discussion if anyone wants to hop in and either ask a question, share a story. Yeah, it's open. If you guys have questions about me personally, Henry personally, whatever the case is, we are pretty much an open book. We're here for you. Yeah, open up if y'all like. Central bank dealers range. How do we use other dealing ranges? 2 to 8 p.m., 8 to midnight, midnight to 2 p.m. Same thing. It's all the same thing. But to me, I have found maybe look at all three and identify like that 20 handle range. If 2 to 8 p.m. is 35 handles and 8 to midnight is 10 handles and midnight to 2 a.m. is 20 handles, use the one that's 20. You want to get as close to 20 as possible. That's the way I would study it. Any other questions, comments, concerns? Open up. Don't be shy. Let me know.
I have something, Carson.
Hello.
Hi. Yeah, if you could help me just analyze this chart, I'm gonna put here in the chat box. Okay. In a
Okay.
minute.
Yeah.
Okay, so this is three correlating asset. As you can see, the chart is pretty similar, but I don't want to tell what time frame is this. If you could help me, that's what's your like drawn liquidity or what you think the next few candle gonna draw?
Okay. Can you guys see the screen as well? Do you
No,
guys? Oh, you don't see it on the screen.
you
All right.
see your chart right now.
Okay. So this is what he is looking at. All right. So I'm not gonna look at the time frame. I'm not gonna look at what chart it is. I'm just going to tell you what I might see. Just give me a second to look at it. The middle one I think will go lower into the busy, into that blue candle.
Mhm. On the top,
The higher one, the one on the top, I think could go lower than go higher. I think it might dip a tad bit lower and then go higher.
because what I saw that the higher one took out this liquidity on the left, this one green candle, this high, and that's why
I would see maybe the potential of the one on the bottom too. I see that one maybe going down a little bit.
you feel
But
that.
more so I see it trying to go higher. That's what I see right now. With no regards to time frames or a market or whatever the case is, I would see the bottom one going maybe a little bit lower than higher. I would see the middle one going a little bit lower, then potentially going higher, but that one probably would go the lowest. And then I see the one on the top going lower and then potentially going higher.
So pretty much they're gonna move the same because they are correlated. That's what I was thinking. So they're gonna come down to fill this imbalance and then go up. That was takeaway.
Yeah.
And pretty much you said the same. Yeah.
Yeah, I get the gist. Yeah, I would say my gist is on it lower than higher.
So this the top one is the EU Euro USD. The middle one is the Dixie but inverted, and the low one is the GBP USD. So, and it's monthly chart. So what you are saying now, that then you say the Dixie is gonna go up in normal chart.
Mhm.
I was looking at this one. Thank you for your.
You're welcome. You're welcome. Not a problem. Any other questions, guys? It's open to you guys. Jess said, do either of you guys have a goal or time frame as to when you may transition full-time traders? Do you find that keeping your jobs give you guys existential purpose? That's a good question. To me, 26 or 27. I work for a Fortune 500 company, so it's not a job that I'm going to just quit on a whim. I'm not going to just impulsively quit on a couple good trades. I have a very, very good job. It pays me well. It has good benefits. It allows me to somewhat travel and do certain things. But when I turn 26 or 27, I will probably step away from the job. I will have had it for about 5, 6 years from there, and I'll probably I'll want to do a little bit of travel, maybe a year in there is travel, and then I'm going to be taking about 2 years to prepare myself for Robbins, and then I'll have about 2 years of that gives me about 2 to 3 years of full-time trading experience going into Robbins in 2030, and then by the time I'm 30 in 2030, I'm gonna give Robbins a shot. But yeah, that's about my time frame. You know, I'm not rushing. I'm not trying to rush to get out of my job, and I think also I'm fortunate. I have a good job. I've had shitty jobs, and I've traded through shitty jobs too. You know, there's shitty jobs, but there's always a job out there that might be able to fit what you have going on a little bit more. So that's my time frame. I can speak for myself. I can't speak for Henny on this one. Henny, if you want to tackle that one too, you can.
For me, it's August.
August, let's go, baby. I love it. And that's the thing. I'm always going to hype people up when they do it too. Like everyone's life is different. It's a different story, right? It has a total different preface. It has all this stuff. But yeah, that's awesome. Like I will always encourage and support it, but you always have to know what you are stepping into, right? So that's the biggest thing too. Is just wherever it is, wherever and whenever it is, know what you're stepping into and step into it with grace.
Yeah,
Always.
absolutely. And that's the goal. I mean, I don't hate my job or anything. I like it. I mean, it's flexible. It allows me to do trading and everything in the AMs and sometimes in the PMs. But I just enjoy spending my time this way a lot more. And there are other things I'd like to do with the hours that I commit to my job right now. So
Yeah.
there's no hatred or anything to it. But I mean, the main goal in trading for me has always been to get my time back. Of course, I'd like to make money and I'd like to be able to have whatever lifestyle I want. I mean, I'm not a very materialistic person or anything. But ultimately, I want to get my time back and I want to be able to spend my days as I like to. That's why I have the daily goals and such. So, I mean, if I can come into the markets and get 10 points in 15 minutes and then do whatever I want for the rest of the day, I will take that every single day.
Yep. That's all perspective.
And so, yeah, for me, I mean, I'm not in any rush to get out of the job. I feel like I could potentially leave it right now if I really wanted to, but I want to continue to prove my consistency to myself over the course of the year, or at least over the next, let's see, it's March, so 4 or 5 months.
Yeah.
And then I'll be ready to go when it's time.
I love it. I love it. Suzanne asked, I need to get a better grasp on fibs. Can you recommend a study? I can recommend a study. Let me show you really quick. If you are listening, Suzanne, I'm going to give you ICT core content month 1. I would recommend. Let me tell you the exact ones. Again, that's going to be ICT core content month 1, and I would utilize just basic start out with episodes 3, 4, and 5. That's going to start to break it down on kind of the meaning behind fibs, and the only main fib that you need to start out with is just equilibrium. So month 1, episodes 3, 4, and 5, that is what to focus on right now: equilibrium versus discount and equilibrium versus premium. he'll talk about a little about what fibs are and a little bit of an essence and what does it mean to be above or below an equilibrium. Any other questions? Any other questions? You're welcome, Suzanne. You're welcome. Any other questions? I hope you guys got knowledge. That's another week in the rear view. We're not going anywhere. I'm not going anywhere. Sometimes the trading will be hot. Sometimes it won't. For this week, it was pretty laid back week. And there will be the week of the 13th through the 17th. I will not be really on at all. I really won't have time for a trader roundup. I won't be able to be there as much. I will be back by the weekend, so I will be able to kind of catch up. You know, I'm not going to miss a call on the weekend, but I'll tell you guys right now, Twitter might not know, and they might say that I fell off or whatever the case is, but I won't be taking a single trade that week. So I'll already forewarn you guys. And yeah, that's just kind of how I handle, like when I'm traveling, I trade to not trade. And when I'm home and I'm focused, I trade. And when I'm gone and away, I don't trade. Now I'm a trader, so I look at charts and I like to stay in tune with ES and dollar, and it takes 2 seconds to turn it on my phone and look at it. To think that I'm not gonna do that is, come on, like I'm gonna look at it, but you know, I'm not gonna be pressing buttons, as you guys are starting to learn. And I'm glad I get emails and messages of people that tell me that as they're going through trades, they hear my voice, and it's probably the most rewarding feeling. I'm not gonna lie, because I know what that's like, because I have Michael's voice in my head a lot, and that basically means that I'm reciprocating the same thing that Michael did to me. And so it's really just it really is Michael's voice. So a lot of the shit that I say is just coming from Michael and things that I've learned from Michael. But when I'm starting to get these emails and these messages and DMs and comments that people are finding success in certain areas of their markets and in their trading journey, and throughout that they hear my voice, that's really why I do this stuff. Is because I know that it does, and I know that my voice will linger. I don't know why it's my voice. It could be anybody's voice. It could be your voice. You can go and do the same stuff too, but I'm very fortunate and blessed because it makes me think that I'm not just sitting here and blabbing my mouth and spending all this time for nothing. It's actually going in one ear and it's not leaving the other. It's staying here. So I appreciate each and every one of you guys. And I'm speaking to not only this group, but we have an email list of almost 70 people. So even though there might only be 20 people on the call, it's reaching a lot more people, and it will just continue to grow. It's not going to get smaller; it will only get bigger. So I'm blessed. I'm fortunate. I'm nobody special. I'm just a human. I'm just a kid that loves to trade. But I appreciate each and every one of you guys. Any closing thoughts? You guys feel free to hop in.
Thank you, guys.
Not a problem. I appreciate you guys. We'll be back at it this next week. Like I said, I'll be probably a little bit more active earlier than the week, although I will be watching the fire. Axel said, I'll read it for the group in case they don't have the thing on. Words do no justice to how fantastic this analysis / sales review is. Clean, concise, transparent. You guys have me taking notes like I'm watching Michael and putting a smile on my face, not only from the overlap in certain price levels to my own, but also your take on the trigger finger syndrome and how you yourself are the most indispensable part of your trading plan. I'm really looking forward to these future focus groups. 5-star work here, Carson and Henry. I appreciate you. Thank you. I appreciate it. I got some chills. I get chills. Urban said I'm profitable on demo, but when I tend to go live, I get lost on the charts. Any tips? I'm currently break even on live. Yes, you're thinking too much about it. You're thinking too much, whether it's demo or live. The chart's the same. You're overthinking it. That's it. And then overthinking it causes every other thing that might cause it to fail, but you're just simply overthinking it. It's the idea that it's live money. You're overthinking it. That's all. Don't think. Do. Act. Take action. Think. Don't think. You have to think, but don't think about it. But there's so many other better things that you can think about than whether or not it's live or demo. It's the same thing. Same price feed. Same 2 buttons. Nothing changes. But everything changes if you think about it too much. That's my best advice. But you're break even on live too, so that shows improvement. You're finding ways to survive, and you have to survive before you thrive. So continue to survive. You'll stop to think about it. You'll start thinking less about the fact that it's live, and you'll just start to trade. And that break even will slowly work its way into profitability. What do you think about Michael's strat he introduced on prop spaces? Profit 3, risk 5, based on how. I don't know what that means. I'm having trouble pick that up. Do you know what that means?
Yeah, he spoke about, so it's like, it's a high frequency trading concept, basically, where you're entering with risking 5 points to make 3 points. And with a system like that, you need to, I think that makes sense. It's high frequency because you're taking a lot of trades and you need to have a higher hit rate in order for that to be a profitable system. But the idea behind that is not, I mean, it very well could be a long-term strategy, but my understanding of it is it's designed to teach you to get in the market and to pull out the minimum threshold,
Yeah,
right? So,
makes sense.
and you slowly adjust that. You go from 3 points to 3.5 to 4 to 5 to 6 to 10 to 15, and you slowly learn to pull more from the market and to be in a trade longer, because that's something you have to grow accustomed to. If you're new to the market and new to trading, it is hard to be in a trade because every move that is against your trade is going to feel like it's the end of the world. It's going to feel like the trade is going to fail. But that's not how it works, right? You have to have those down close candles in order to build support for a move that's going to continue higher. And so that system, risk 5 to profit 3, is designed to get you in the market and to slowly build your emotional tolerance for the trade. So
Henry, Jess has.
I'm 24.
Yeah, Henry's actually older. When did you turn 24?
September.
September. Yeah, he's older than me. Crazy. He's older than me.
Baby face.
Yeah, we need to get some facial hair on that boy. No, it's okay. Henny, we love you. We love you, Hen. But yeah, any other questions, guys? I hope you guys enjoy your Saturday night. I am having to off this call after it, as it's what's the word? Loading, rendering. So as this video is recording, rendering, I will be gone. I actually have to go out somewhere tonight, and I won't be back until the morning tomorrow. So I will get the recording to you guys early, midday, lunchtime EST tomorrow. For any of those who want to go back and rewatch it, I know a bunch of people will be waiting for it. But other than that, I appreciate you guys. I appreciate all the love. That's I appreciate you guys so much. I'm just reading chat right now. Just a whole bunch of thank you guys, and I thank you guys. You know, it's a, like I said in the first very call I did with this. Also, do it yourself. You've never missed a call. You were one of the first ones on the call. You were the first one on the first call, and you are almost the first one on every call, which is very funny. But I appreciate and applaud every single one of you guys, because it would mean nothing if me and Henry just sat here and just went back and forth with each other. We would get a little value, but we know what we're talking about. We know what we're doing. It's for the other viewer, and it's a 50-50 commitment. It's not just us showing up every week. You know, there's other things that I could be doing. There's other things that you could be doing, but it's the fact that you're showing up. And even if you can't show up, I know that you show up at an outer time when you're watching the recording. So I appreciate all of that stuff. It does not go unrecognized, and I will continue. And I know Henry can vouch for me on this too. We will not stop. We're gonna keep on going. So he said I had the same issue as Urban a week ago. 3 consecutive clean free trials passed. Just a bomb a challenge came back on Friday after a 4-day break. 30-minute analysis needed at a 2.3% gains on a 2-hour trade. We need to keep working on ourselves more when we know analysis is consistent, rookie mistakes, and humble beginnings towards success. My friend Victor and I call it the valley of disappointment, coined from Atomic Habits. Yes. Yes, 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 yes. Thank you, thank you, thank you, thank you, thank you, thank you guys. Heard you for the first time Valentine's Day and thought Carson was special. Henry so amazing today. Wonderful way to spend the Saturday afternoon. We appreciate you guys. Singers, thank you, thank you, thank you. Appreciate you guys. All right, well, I'm gonna go ahead and wrap this up. I've got somewhere to be. Enjoy your guys' Saturday. Enjoy your guys' Sunday, and more importantly, going into this next week, trade safe. Trade safe. It's the best I can get. It's the best thing I can say. You don't have to trade good. Ah, there he is. There he is. You don't have to trade bad. You don't have to trade good. Just trade safe, and let the rest do its talk. As long as you can trade safe, survive another week, you'll be fine. I appreciate every one of y'all. Much love. Take care and blessings.